Sorry guys, I really don't know how to work Zoom too well, so I'm trying to figure out how to get people in at the same time.
I'll do it over here.
Oh, you can do that? Perfect.
Yeah, I think I can get
I think I got a few more people joining me.
I need to have it not require that.
On the TV behind me? Cool.
Oh,
Jeremy, can you see if Duke's in there?
Zoom?
Yeah. I'm allowed to see the other people. Oh, yeah.
I'm in the group.
Yeah. Okay. I can just give it to anyone. I'll go ahead and start. Yeah. I'll just do that later.
I can get them in. I'm in.
Okay, cool. We got one more person. All right. So thank you everyone for attending my first class. I really don't know how I was able to manage to teach a class as a freshman. So thank you, Professor Sweet, for giving me this opportunity.
Yeah.
All right. Uh-oh, there we go. Sorry, Professor Sweet actually has a meeting. Okay, but we're all good. I figured I'd put an about me slide. So I'm a current freshman at UTSA. I'm teaching this class through the Investment Society. There's a meeting tonight at 7:45. If you're not already in it, you'd like to attend. And right now I'm pursuing a degree in finance here at UTSA. It's not letting me switch. Okay. Bloomberg Market Concepts, the course I'll be teaching. It's designed to accelerate your career in finance by earning a course certificate at the end of the semester. So through this course, we'll learn the fundamentals of the financial markets. We'll do that by learning to use the Bloomberg terminal, and it'll teach you trading strategies to help you improve your personal portfolio. Or honestly, if you aren't a business or finance major, you could be an English major for all that matters, but investing is so important. And this will teach you the skills to at least start your portfolio. You'll get a head start from most of the people going in and knowing what they're doing. So what's in it for you? Don't really know why yet. So here's the why to it. It's a $250 course. Most people pay it. And it's really expensive. I think it costs $150 as a student, but through UTSA, it'll be completely free. I'll go ahead and show you how to sign up here real soon. And it'll be a big resume booster. A lot of people want to see this on your resume. I know Professor Sweet was encouraging all the finance students on campus to have it included. It'll really set you apart from the rest of the people that in internships, jobs. It's just something good to have regardless of what your major is. So I'm gonna go ahead and exit out and then let the people on Bloomberg explain exactly what it is so you get a better idea of it. It's their little video that they have. Maybe, we'll see.
To a career in finance. And how to use the Bloomberg terminal, the leading source for 24/7 financial news, data, and analytics. Go at your own pace. Don't test your knowledge of equities, fixed income, economic indicators, and currencies. As you progress, you'll learn strategies you can actually use for trading stock options or commodities, and for building a portfolio. Evaluate risk and opportunity, and find market moving Show employers you're ready to take your career. Learn more at BMC on the Bloomberg terminal. Visit bloomberg.com/BMC.
So sorry about that if you were on the Zoom. I know videos don't really translate well if you're watching from at home, so I apologize about that. But I hope you got a better understanding of what the course will be. So it's going to be every Wednesday at 1 o'clock is when we're going to hold the meetings. I have a schedule later in the presentation, but it should be pretty consistent. There's 1 week that is like, I think this Thanksgiving break is on a Thursday. So going to figure out what we're going to do when it gets a little closer. I don't really want to hold a class the day before everyone is driving home and all that. So I'll probably just either reschedule it or not have one that week. But we're going to mostly be communicating through the group meet. Here's a QR code to that. It'll be, I'll post the presentations in there along with some reminders before we start. And this will just prepare you, make sure you don't fall behind, because at the end there's a 100-question test, and that's going to be how you earn your certificate. So does everyone have that QR code already? So how to sign up? Just go into your browser, Google UTSA Bloomberg Market Concepts. It should be through the library. In fact, I'll just walk you through that right now. So, say Market Concepts. You can use these computers here if you're, I believe if you're signed in to your browser. So yeah, this link right here, this top one, the library, you're just going to click on this. And then it should be this one right here. Go ahead and click, use your UTSA email address to sign up for BMC. And then mine will look a little different because I did this last night, getting it set up. But it should use your school email. I know they just asked us to reset that and start it up. So I recommend using the one you just got, school email there. And then it should just ask you to go to your email, confirm it, and you should be good to go. So I'm going to just wait for everybody. It was a little tricky when I did it at first. If you don't have the school email that you just got, it was pretty. All it's going to ask, I think, of course, just UTSA student, and then it'll confirm it, and you should have. All right, perfect. So I'm just going to go ahead and show you actually what it looks like once you're there. So this is what it's going to look like, the homepage right here. For next week, we're going to start the economic indicators. So go ahead and watch the videos through that. You see there's 3 little sections right here. I'll be reviewing those at next week's meeting. So if you want to get ahead and watch them before, I'll be formally covering them then. Or you could just wait till I make the presentation that covers all of it here. But I'm going to have a schedule. So these are the, I guess you could call them like modules you have to complete. I have a schedule on the presentation of what we're going to cover and when. And it might change, but for now, I think doing it in order right here will be the best option for us. Are y'all signed up, the people here? Were y'all able to do it? So like I said, next week will be the economic indicators. I'll have a formal presentation to cover everything that's on that. But doing the modules will definitely help you. I think they're required to take them in order to, before you take the test. So by doing that and reviewing it in these meetings, you'll be on path to get your certificate by the end of the semester. So right here is the schedule. Today is the 6th, so we're going to be so next week is the economic indicators, and then we're going to go on to currencies and fixed income, and then we're going to have at the end 2 weeks of review. And around then, I don't want to be doing this during finals week because I know that's like really stressful for people. So we're going to have 2 weeks of review, and then whenever you're ready, you can go ahead and take the test online, and you'll be set there. Hopefully, you earn your certificate. You'll be able to add it to your resume. So that's really all I have today. It was really just an overview and introducing the course. So I've linked my contact information. Be best just to communicate through the group meet. Like, here's my email and phone number. If you're ever like having trouble getting in or something I would be able to help you with, feel free to contact me. I'm gonna save this, so I'll go ahead and post this presentation in the group meet after. So should be good to go. If there's any questions, if you want to drop them in the chat. I know we didn't really cover a lot today, but feel free to.
All right, everybody. So today I'm just gonna go over some of the basics as we make progress in the sector wars. So again, Camille, this is your first time. The goal of this is to help you build a good model, right, for your security, to kind of understand the industry of materials. And you can take this and kind of go and do this for any industry, right? So Cam, you kind of, you were here last time, so you kind of get that. So let me start with saying, the first thing that we're going to do is we have some videos that Professor Sweet has made. So he shows you how to build an initial model based off the Russell 3000, which has 3,000 of the largest US companies by market cap. And so, what classes have you taken so far, Camille? Yeah, I know a little bit about CAM. So. Oh, okay. So are you interested in investments or what's your... What is your question? So what is your experience in investments or finance, like as far as classes?
So I've been a passive trader for about 20-something years.
Okay.
I've been in the military, so now out.
Okay.
So I'm trying to transition more of a active role.
Okay.
If that makes sense.
Okay. So you're familiar with the industry. I mean, okay. So I won't go into too basic an explanation, but my experience, so you know, Camille, I did an internship with Victory Capital, which they work with fixed income bonds, right? And so in that time, I learned how to analyze the bonds, you know, how I walked through all the steps that an analyst goes through. So I hope to bring that information to you guys, so maybe that can help with your experience already. Same thing for Cam and anybody else who's going to take this class. So I was talking to Cam a little bit about my goal for this coming week. Basically, I'm going to show you guys a model. So it'll take me a little time to log in to this personal computer, but I'll show you the model that you're going to build based off of a tutorial Professor Sweet did. And then I'll show you, hopefully you and I can like go back and forth and you can pick, you know, a company that you just start looking into. Are you in security analysis or anything this semester? No, okay.
I'm really liking it.
Okay,
I'm
okay.
not in favor of it.
The higher level, okay, not yet. Okay, so this is, I mean,
Right.
yeah, you have any questions, come to me. So let me log in. It doesn't look like we have any participants trying to add right now, so just bear with me a second. Oops. Camille, I'll send you an email after class too, so you go back and forth. Are you familiar with the materials industry or that sector? No? Okay. So let me just go ahead.
It's a good one to start with.
Okay.
Works well as a model and it's really interesting.
It's a lead itself and it's not that we-
Yeah, so for this model, you'll use Excel. The video is really good at describing what's going on. So I don't think you'll have many questions, but if you do, email, that's fine, or, you can bring in the questions, or you're gonna do Zoom next week, so, shoot it in a chat, or honestly, just email me. That'd probably be easiest. Yeah, we have the same problem over there. I'll just go ahead and troubleshoot right now, and I can kind of describe this to Camille at the same time. So Camille, when you come in person, the model that we're going to build is going to pull in the data from Bloomberg. Okay, so right now you see the NA requesting data. So we're trying to pull in that data from Bloomberg. The video will explain it a little better, but right now it's not working because the Bloomberg add-in isn't working. So I'll show you how to troubleshoot that.
I can say it's always slow. in my experience. Yeah.
Really?
Slow in my classes, it's kind of frustrating.
So that's cool. So if you're in the lab, Camille, Cam, and it's not working, it's not pulling the data, and you see the Bloomberg tab up top, what you're going to do is you're going to type in API. You're going to do the API environment diagnostics.
The only thing before you do that is, I've been told you have to be out of all.
Oh, close it.
Microsoft products, Word, Excel.
Okay.
If you're in them, it messes it up.
Okay. Which
I'm surprised
that makes sense.
because you're in a lot of logic, right?
It's not working like that. So again, make sure you're logged out. Let's go back. Try to figure out what's going on. Just click start. Well, I don't see that one, but
Maybe when they fix all these machines, that won't go away.
hope so.
I need to put that up on the front so people know to do that.
Oh, I write in all caps, so that may not. It'll probably be too big. If you want, I could try to write it up there. Wow, this is taking a lot of time.
I've started putting it into my Excel models. That use Bloomberg people. Oh.
Normally it's pretty quick. Basically, what you're looking for is that, Bloomberg, the Excel add-in, or the Bloomberg, those sections should probably be red if it's not working. So right now I kind of don't know the problem, but
So I'm taking it, you have to do some sort of adding on your Excel that's on your computer?
Yeah.
Okay.
It has to be a computer in this room.
Oh, so maybe, okay.
And if you look at on the board, it's one of the ones that are working right now.
Yeah,
So that's for the terminal specifically of Bloomberg, right? Okay.
So when you load Excel, sometimes the adding not there, and you load Excel and a machine on this room, and if you don't have the number tab, you gotta get out and do all these things, and then that's not. it's working.
Yeah, let's see.
See the number. So, load.
Yeah, it was up there when it wasn't working as well, but now the data is, no.
You know, you see that number button?
oh, yeah. Mhm.
If you don't see that, you gotta get out of Excel. And do that.
Oh, gotcha.
Okay, so let's see. And then if it's not working, go into the add-ins. So you go, let me just show you again. So you go File, all the way down at the bottom into Options. Then you go to Add-ins in the left column. And so it should be Excel add-ins, and now it's showing it's working. So again, I don't know what's going on.
Yeah, it's working.
Yeah, I don't, and I just pulled it on that terminal over there, so I don't know what's going on. Camille, if you want, just real quick, I'll show you what it should be pulling. If you can't figure out what's on there. Oh, see, this is what the data should be pulling, right? So,
You know what you might do is you might get in the Zoom on the machine to use. That's a trick. As you think you folks. So record it, we can edit the recording down. Yeah, why don't you just go on that machine, that'd be best.
I did, again, can you hear me? If you can you just send me something in the chat, please? Okay. So today, what we're talking about is the model in the materials sector. So last week, I just kind of covered the basics of why the sector wars is important, what you can pick up. My experience, I did an internship with Victory Capital, so I have experience with valuing bonds and also the sector of home building, which goes hand in hand with materials. If you have any questions, go ahead and shoot me an email, and at the end of the class, I'm going to shoot you an email on what I want you to do for this first week. So right now, what you're looking at is the model for our sector. I'm going to send you a link to a video of Professor Sweet. It shows you how to build this model in 4 videos, and I'll show you the order as well that you have to watch the videos for it to make sense. So this is going to be the product that you will have at the end of it. Unfortunately, as you see this data, it's pulled directly from Bloomberg. So you kind of have to come in to get the results from the Bloomberg terminal. But for the meantime, I can share this data, and it's really not going to change. So whenever you get a chance, come in person, and we can build a model, and you can have, if you have questions, I'll go ahead and help you out with that. So I kind of explained what's going on in the model. Basically, we're taking the Russell 3000, we're filtering it down to just the pertinent firms, right? So all of those in materials. And so you'll see these sub industries, right? These are all within materials. And for instance,
He's asking why he's using Russell You said you're using Russell 3000.
Okay, so the Russell 3000, right, it takes 3,000 of your largest US firms, right, and by market cap. And so those biggest firms are going to be good for analysis, right? So that's kind of why Professor Sweet used it for his model. And we're going to go deeper into the material sector, but this is just the initial model. And I'll show you how to do that going forward. But for right now, if you guys can just build this first model, I think that you'll have some questions about, again, why are we using Russell 3000? There's probably a better option for us. And we can go and look at that throughout the semester. So right now, we have a few participants. We have Ms. Mill Johnson. Okay, so we have Ms. Mill Johnson, we have Cameron Butler, and we have you if you're really interested in participating in materials. So what I think would be best for us to do in this fall or in this upcoming week is to kind of take this a firm that you see on this list, and if you think you're a little interested in it, like Eagle Materials, or for instance, Cam is going to take Vulcan Materials. If you want to take a firm, go ahead and just start looking at the financials. If you're doing it from home, you can look through Yahoo. If you come into the FSC, you can go ahead and use Bloomberg. So I'll show you kind of what I was telling Cam about, what you can start looking at. So
Yeah. It's pretty simple.
So right now, right, we're looking at the Bloomberg terminal. So you won't have access to this from your home, but I'm just going to show you Vulcan, because that's one Cam's taking, and kind of walk you through, how you want to start looking at this firm. So first, we're going to type in the terminal. We're going to go VMC is Vulcan Materials Company. You'll see VMC US Equity. That is the information for the stock. If you look at the corporate, VMC Corp, which is below, that's going to be their bond. So we don't need the bond information right now. We're just going to look at the US Equity part. Go ahead and click on that. And then you'll see this menu that pops up in the Bloomberg terminal. You have, quite a few selections. If you want to know more about Vulcan, you do security description. Right now, we're going to look at the financial analysis. So that's going to show you their numbers for the past 5 years, going forward, what what analysts are projecting. And so, if you don't have much experience with looking at the financials, again, go ahead and shoot me an email and ask me, what should I be looking for? In this case, Cam and I took a quick glance at it earlier. So you'll see that the revenue, adjusted revenue, is growing, right? In the last couple of years, it's kind of tapered off. They project that, they're going to have a pretty good 2021 and 2022. So that looks good.
So with that, I'm going to ask the question. So, based off that projection, then you want to kind of look at how to get to that projection. Like, do you have something new coming up, or what is the best? Because it was stagnant for 2 years, and then now it's going to grow.
Absolutely. So the home building sector, they've experienced a lot of growth, but also, COVID slowed it down, lumber. So right now, I'm not going to get too far into it, but yes, you kind of want to see why do analysts believe, they'll get to that amount because they've been saying that, right? So, yes, and I'm going to show you in a couple of minutes how to look at that information as well. But for initial first glance, right, it looks like, okay, maybe this firm is going to be doing good growth in the coming years. But look at so the growth percentage, right? Percentages are really helpful, because then you can see, year over year, right, between 2018 and 2017, they grew. Between 2019 and 2018, they dropped a little bit, but that's not too bad. 2020 to 2019, right, that's a big drop. So what happened in those years? Just started looking at that information. We'll look at gross profit real quick. Again, they're on growing path, so that looks pretty good. Their numbers are pretty consistent in margin percent. EBITDA, no different. They're growing. They're also pretty consistent. I mean, we drop off a little bit, but overall, that's pretty stable. The net income, again, growing. Margin's pretty good too. Now, where we did note here in the EPS, you'll see that there's a little bit of worrisome data, right? So they've had some inconsistent numbers in the growth percentage. So 2017 negative, 2018 that was huge, and then 2019 they dropped back to like more of a normal number, and then 2020 and the LTM stands for the trailing 12 months, last 12 months. It's negative and it's almost zero. So, that might be something you want to look into. Why are their earnings per share down? And then again here, why is the revenue when it's been almost, the average of that is what, about 10, 11 for 2017 to 2019 period. And then in 2020, why are they? So, and then why, again, as Camille pointed out, are they expecting such tremendous growth in 2021, 2022? So this is just looking at the financials. Again, just to get to that real quick. I'm going to try to repeat myself so you guys can get a little more familiar with it. You just go to BMC US equity, so that's the ticker. Then you're going to go over to the financial analysis. So number 7, FA. You can click on it. And then that pulls up their recent data. You'll notice that this is pretty valuable information, but if you have questions about their enterprise value, their earnings, specifically multiples for this specific firm, you just click on that information. But for now, I think it's fine. So the way I would go about looking into why are they having such big revenue growth, I would go again, type in BMC. You're going to go into the equity again, but this time, instead of clicking on financial analysis, you can click on company events. So that's EBT. You can type in EBT, or you can just click on it. That's pretty cool. And once you get there, the EBT, you're going to see these are the events for the last, from January 6th, 2021 to January 6th, 2022. So the events since essentially the beginning of the year. What you're going to see here is you have earnings calls. Now, to me, earnings calls are very valuable because you get a lot of information from them. I'll explain a little bit about what those are. But you'll see there's you have Q4, there's Q1, Q2, and Q3 is going to happen on November 5th, right? So it hasn't come yet, but we have, fourth quarter of 2020 and the first and second quarters of 2021. So if you want to filter out the other information, right now, I would say just look at the earnings call. So go ahead and filter it out. I'm going to show you what we have available. And then over here in the resources section, this is very valuable. Let's say we want to look at the Q2 press release. So what this is on the earnings call, they write out, this is all the data that was covered. This is what was reported. And then this is also the information that is being reported by the managers. So if you're looking at why revenues expected to grow so much, why we've had some losses. This is very valuable information, right? And what's even more valuable to me is, okay, go back. So you can actually listen in to what they're saying, right? And right there, you just play audio, and you're going to listen to their whole earnings call. So those normally last about an hour or so. That does vary, but if you can spend a little time, maybe just listening to the managers and try to gauge if they're sticking to their word, if they're sticking to their goals, like they'll establish some goals such as we're trying to pay down debt in the next year, so they can get better credit ratings and they can issue bonds, it's a better rate for that. It'll cost them less, right? But so you can, here's the final transcript, sorry. You should look at the final transcript if you're going to listen to the call. This is where everything that they said is typed up. So you can follow along. These are the management. So the operator is just the person hosting the call. Then you have the different, the CEO, sometimes CFO. Normally it'll say their position. So like right here, today there's Tom Hill, the chairman. So that's James Thomas Hill. We have Suzanne Woods, senior vice president. You can see who's participating in the call. And, the CFO, I kind of like to see what they say, but they all have valuable information. They talk about their EBITDA. To me, this information, you're not going to find stuff initially that's very different from what the earnings, like the financial data is going to say. But here in the Q&As, you might find out some answers to your questions. So what happens is in the Q&A section, you have analysts talking about their questions, right? So why did you guys perform this way? They might ask the questions that you have, and it's also valuable to listen to them if you want to be an analyst, because these are, most of the time it's not going to be like you or me, like an entry analyst. Normally it's going to be an established analyst who, knows this sector in and out. And, if you listen to the competition, Vulcan, Martin Marietta, if you listen to their closest competition, then normally you're going to hear the same analysts talking, because they take those analyst questions. Normally they're a little better formed than, like for you, who might just be getting into the field. And that's just kind of what you'll notice is normally the same analysts that are asking questions. So if you want to scan this area, maybe you see something that looks interesting, jot it down, and that's a good source of information. So I don't want to overload you guys too much, but that's kind of how you can get to know a firm. If you also go to, if you don't have the Bloomberg terminal available to you from home, you can also go to finance, right? And you can kind of do the same thing to look at the Russell 2000. And it's going to show almost the same data. So you have, oh, sorry. So if you go to the Russell 3000 on Yahoo Finance, this is available from home, right? So component data is not available. I can send you, who makes up the Russell 3000, and I'll share with you the initial model. Since you're not going to be here next week. Okay, but if you can't, then I'll share it with you. And so now I'm going to talk about, it's not really an assignment, but I kind of think for next week, if you can pick one of the companies on the Russell 3000 from this model, we can kind of just pick one now. It doesn't have to be the one that you're going to follow the whole semester. But Jay, if you see something that sticks out to you on this list, I'm gonna, just scan it slowly. Go ahead and type it in the chat. Bill, again, this is just very high level. I just want you to look at kind of their financials, maybe jot down some questions about, like Alcoa, any of these, firms.
But is there some sort of process on how you're picking them? Like, you know, randomly?
Yeah, so for the model, we're picking the whole materials industry, right? So that's kind of, our job is to analyze the whole materials industry.
Right.
For this first week, I kind of want you to look at an individual firm and then, start to see how are they performing, maybe build some questions. And when we come back next week, we're going to talk about, hey, what questions do you have? What did you notice with this one firm? And then what I'm going to have you guys do is there's sub-industries within the materials sector, right? So, like for instance, Cam wants to do bulk materials. He's going to look at construction materials going forward. So, like, we're going to expand on it, and eventually I'll show you guys how to look at the whole industry. But we're going to start off small, and we're going to expand on that knowledge. We're going to expand on our questions, and then build on our analysis skills, right? So, Jay, so I filtered out some of the data. Professor Sweet kind of talks about how to do that. So once you go through the model that Professor Sweet shows you how to build, you're going to find that some of the data comes up as not applicable. So first, we're going to just delete those because we don't have all the data, and it's hard to compare between those firms and the ones that do have all the data. So we're going to take those out, and then you also want to take out outliers, which I'll explain in the video. The firms that have like crazy high earnings relative to everything else. You want to take out the outliers because then they really throw off the model. So this is what I was showing you is the filtered model. So in the filtered model for the Russell 2000, we have 103 firms, and this was just my filter. You guys may do it a different way, but this is what I got down to. So we dropped from 130 130 firms that are within the Russell 2000 to 103. So
something you might consider is one of the biggest companies out there is Bloomberg, but it's not in your index because it's a UK firm. So sometimes what I'll do is I'll go out and say, what are the largest materials companies in the world? You might be in auto, you want to bring in Toyota, BMW. You might add some other firms as well.
And again, like just like Professor Sweet saying, this is just for the U.S., right? So the 3,000 largest U.S. or for us, it's the 130 largest U.S. materials firms. So we can go ahead and look in that into the future. I might have some of that information next week, and then I'll talk to you guys about it. But for now, I think this is a good starting point. Jay, did you see anything that you might want to point out? This is you on the Chase Corp. That's not Chase. They're not affiliated.
No. They're a pretty good sized firm. We've looked at them before.
Once it,
The interesting ones to me are ones like Nucor. I was going to say Glencore, but Nucor is really interesting. It's the mini mills for steel and getting what steel processors are doing on that. It's a good large firm, and it's got a big Texas. I've even thought if ever by Nucor, we should go on a field trip and visit their plant. It's a long drive. But it's interesting.
The options, I always got a sign, people were trading options on that, I think earlier this year. Oh, it's still up over here.
so
You can see it on the computer.
Jay, or Professor Sweet, do you maybe have something you think Jay might want to take for the first week?
Well, the DuPonts and Downs are always interesting. You have to think, you want the metals, you want the chemicals, and then you got kind of your specialty like timber and paper. I think what you're interested in. I would suggest, I don't know if you have it in there, but look for the bigger companies, those that are 20 billion or larger.
Yeah, I haven't, this is just the first model, so I haven't,
There's some firms, there's a firm out there, I forget the name of it, it does, smells for like hand lotions and stuff like that. It's really not interesting. And that's all it does, it's very specialized in that, so you want pumpkin spice and October kind of stuff. So I forget the name of the firm. Is that one? It's in, I don't know if it's in San Antonio, I don't know. I can't remember the name of the firm, but it's really interesting. And there's firms, that's what I like about this industry. Lyondell is a big firm, that one's LYD is a good one to do. But yeah, I think the bigger firms are probably the more interesting ones.
Jay, for, I see you put an X, not sure. Oh, you just want a United States symbol? Oh, I thought that's what you were referring to. So, I mean, just week one, we'll go ahead and put you down for that. And then if you guys want to change, we'll talk about that going forward. I'll kind of explain. We'll be right back. I'll kind of explain. We'll keep building on that going forward. So again, in the end, we kind of want to look at the whole industry, but for now, just look at one sector or one firm in the sector, and then we'll look at the competition next week. So. Jay, what's your name? Because we just have to get. Okay, thank you. So pretty much that's going to be it for this week. I'm going to shoot you guys an email after this class. Jay, I already have your email, and I have Camille's email and Pam's email, so I'm just going to shoot you like a basic email so you guys have my information. Do you have any other questions, Jay? Okay. So with that being said, I'm going to stop sharing, and yeah, Jay, I'll send out the model as well. It's not going to have, basically this data is not live, so it's fine that I send you out that data. So the last column, the trailing 12 months, that's just from this point, back until October 2020. Yeah. Okay. All right, guys. Thank you for participating. Look forward to seeing you guys next week.
Talk probably the biggest part of the exam, which is the present value. And not only is it a big part of the exam, but I was hoping some freshmen and sophomore would come before they even take finance, because boy, this is most important. This is the single most important. I know a lot of finance students that can't do this. And so it's a big part of finance. So the biggest part of the exam, probably at least a third of it, if not a little bit more, is present value, future value stuff. And it's just a lot of it. And you as a finance major should be able to do present value and future value left, right, upside down, any way. And it's real simple because there's only 4 formulas. And so here's the formulas that you need. Remember what we're going to do today. I'll go through the material, and then I'm going to create exam questions that look just like, very similar to the fact exam. So if you can work those, you should do okay on the fact exam. So we'll do those next week. Today, we're just going to practice some problems. But remember, there's 3 ways we're going to do these. And Kevin and Jay, if you can't hear me or anything, let me know. You can take a picture of that. We'll have the video as well. So there's really 4 formulas. Well, 4 formulas, and then there's the algebra of different ways you can do the formulas. So there's present value problems and there's future value problems. There's present value problems that involve multiple cash flows. There's future value problems that involve multiple cash flows. And all of these are on the exam. And all of these are things you should know just backwards and forwards. So what we want to do is go through the theory of what we're doing with this, and then work some problem in Excel. Remember, in Excel, there's two ways we want to do. One way we want to do is build it from scratch. The second way, we want to let Excel do the formulas for us. So we'll see that with net present value and other things. And then what I'm not going to be too good at is the calculator, because I haven't used a calculator in years, but I'll have to go back and see how do you actually plug it into a calculator. Now, Dr. Baynot said you can actually take the exam on Excel. So I don't know exactly what that means, but so the Excel, I would say if you're going to learn this stuff, learn it in Excel. We don't use calculators very much at all in practice, because why would you? Because, you know, you do it in Excel, so you can save it and you have it. You don't have to keep reiterating it. All right, so here's the formulas, and let's think through these. PV stands for what? Any guesses there? Present value. All right, so what does CF stand for? Cash flow. Yeah, everything's on a cash basis. So cash flow, we don't take the present value of net income. It's always a cash flow. All right. So PV, present value. I don't know why Bill Gates thought I wanted to capitalize. CF is a cash flow. I never know if cash flow is one word or two words, but I'll do it as one word. No, Bill Gates thinks it's two words. What is the I? Yeah, we'll say interest, or even a better way to think of it is discount rate. But interest, that's why we use the I for interest, but it really is the discount rate. And then the N is time, or really think of it as number of periods. All right. And then that's true for the other ones. For future value, it's the exact same thing, except for we're using future value. So it's the same terms. And there's really nothing else we need to add into all of those. So that's what we need: present value, future value. When do you do present value? So you're expecting some cash in the future, and you want to know what is that worth today. That's a present value. We don't use this first formula very much in finance at all, just by itself, because it's rare we just have one cash flow in the future sometimes. So it's pretty rare to use this one. There are times we'll use it, like when you do the net present value problems. If you have a cash flow and it's not the same cash flow, it keeps changing. You might have three cash flows in the future, then you have to do this 3 times. If it's the same cash flow, we have formulas that can do it. So if it's $500, $500, and $500, there's one formula to bring that forward. But if it's $500 and $600 and $700, the only way we know how to do that is take the present value each one of those. But Excel has formulas that the net present formula, you can actually do that. All right. So this formula is the rarest of all the formulas. It's the one I almost never use at all. The future value. So you have a cash flow today and you're trying to figure out what is it going to be worth in the future. We use that quite a bit with inflation. So, you know, I want to buy a car today. I want to buy a car in 5 years. The car is worth $25,000 a day. I think inflation will be 2%. So what will that car probably cost me in 5 years? So that we use quite a bit. So a lot of times the I here is actually inflation. These are the more common ones, and you'll see these. The present value equals sum payment times a present value interest factor of an annuity. So we use that one a lot. In fact, that's the formula we're going to use when we're valuing bonds. And here's the PV-IFA formula. And when we value bonds, I'll show you how you can actually back into this formula. It's actually a much simpler formula than it looks. We use this to value bonds and stock. We'll use a slightly different formula for stocks, but we'll use a formula almost like this for bonds. So what this formula says is, you got the same cash flow over and over again. What would all those cash flows be worth today? So it's $50.50. So what is a bond? A bond pays you every 6 months the same amount of money until the very end. What happens at the very end? You get your principal back. So a bond that charges, pays 5%, it's going to give you $25 twice a year. So you get $25, $25, $25, and at the very end, you'll get your $1,000 back plus 25. So in that $25 over and over again, we'll use this formula to figure that out, and then we'll have to take the present value of the $1,000 at the very, very end. And you'll see in our class, I'm going to show you how to do that. So it's pretty powerful stuff. So anytime you see present value, we use this a lot because we value securities doing this, and we do loan amortization schedules. So you're buying a car for $25,000. You're gonna have a monthly loan payment of, say, whatever. This is going to tell you what that loan payment is. Or if you say, hey, I can afford to pay $500 a month for a car, then this formula will tell you how much of a car you can buy. It's one or the other. So we use this a lot in finance. This is probably the most common thing we do in finance. Now, when you get into wealth management, they use this function a lot. This is when you're going to invest some money today or over time. You want to know what it's going to be worth at some time in a period. What in the future, what's the most likely thing you're interested in? Probably when you retire. So this is for when you're talking about portfolio value in the future, things like retirement planning. So, yeah, you see this a lot with wealth management. And so we'll do some examples there. So I think a present value interest factor annuity, if I'm valuing an asset or I'm doing some kind of loan, mortgage loan, future values when I'm doing some kind of retirement planning, I'm trying to figure out what a portfolio is going to be worth in the future. So the most common formula we use in finance is this one. And then here we'll use this formula. We tend to do the net present value function. Around that. So just look at the formula here. The present value is a cash flow today. And what do? We divide. So what is a cash flow in the future worth today? It's going to be worth less than the cash flow. So we're going to divide by 1 plus the rate to the end. So let's try it. Try it on. Y'all are you in Excel that y'all can do? And Kevin and Jay. So let's say I'm going to get $500 in 2 years. And my discount rate is 6%. What is the present value? They actually have questions this simple on the back. So if you can handle that. So let's copy all this into Excel. And obviously it takes forever. Yeah, boy, there's just too many things popping up on these machines. Well, where did it go?
Yeah.
What happened? Sorry, I don't know why it did that. Huh. It's like it doesn't want to copy that first part. I don't understand that. Let me just try this. Yeah, why? Come on, Bill Gates, you can do better than that. Okay, well, anyway. All right, so there it is. So let's do it by hand the first time. I still don't see the formula. So what did I say? Boy, this is really, there it is, way over here. All right, so how do you do it just by hand? We're going to take the present value. It's going to equal the cash flow divided by two parentheses, 1 plus I, close the parentheses, raised to the 2. Anybody try it yet? Anybody got an answer?
Yeah, I got it.
All right, let's see. So what did you get, Alvaro?
445.
45 or 444.99? Yeah, so 445.
$1.
Yeah, so 445. So yeah, it's just a matter of plugging in there. Can Excel do it?
Yes.
So what is the function in Excel?
Maybe?
PV, and let's see what it is. I don't use Excel functions. So what is our rate? What is our rate? 6%. What is the payment? 500. What's the last one? I don't know what the last one is. Let's try time. I don't use these functions at all. Nope, that didn't work. Yeah, I don't use these functions, so I'm gonna have to kind of figure out. So,
What's, Emperor is, number of payment period?
oh, that was probably it. I did it incorrectly, didn't I? Nope.
No, not.
So we'll have to figure out the Excel functions. I don't use Excel functions except for a net present value. We definitely will net present value. So, so this be kind of a learning experience for me. So, yeah, anybody, you know it, Nicholas or William? How does Excel give you a present value of something? Yeah, you could use the MPB function. That definitely works. The rate is 6%. The value is 500. Well, it's.
So the way I've done it is I was just put like I separate it out and I just highlight those.
I mean, you can do it like that, but there's, the first period is 0 and the second one's 500. I just don't know how you do a single present value. It's set up to do the multiple. It's not really set up for one cash flows. So you could do an NPV. So really, the NPV, it's 0 for the first year and 500 for the second, but that's going to be really inconvenient if you're doing something that's 10 years out.
Yeah.
You'd have to type in 10 different zeros.
It's for the first, cash flow.
Kevin or Jay, if you know how to do it in Excel, but on the exam, it's pretty easy. Make sure on the exam, if you're using your calculator, you know how to do the raise to the second power on your calculator.
So I just.
I'll look that up. That's a good
Yeah,
question
I'm not sure.
to see. All right, let's try another one. Let's say, just for practice, $1,500 in 5 years and 6 months at a discount rate of 4%. What's the present value of that?
Oh, sir, whenever you use, actually, well.
So does that 5 years and 6 months bother you? So there's a couple ways to do this and you'll get slightly different answers. On the exam, most of it is annual, but the most basic way to do this is what? 1,500 divided by 1 plus 0.06, and what do we raise it? I mean, 1.04, and what do we raise it to? 5.5, 5.5 years. And I get 1208.95. So y'all are getting. So that's one way to do it. There is another way to do it, and you'll get a slightly different answer. So my N here, I said was 5.5, but what if I did my N as 66? What would that mean? 66 months. If I use 66 months, what I need my I to be? So here my I, yeah, here my I is 4%, but what is my I going to be if monthly, you do 4% divided by 12, but why might we get a slightly different answer? Let's see, $1,500 divided by 1 plus 0.03333% raised to the 66. Anybody know why we get a slightly different answer? There's a really important assumption here. Compounding, yeah. The 66 is assuming monthly compounding. The 5.5 is assuming annual compounding. Okay, so if you do monthly compounding, you get a lower number. All right, so make sure you're comfortable with that. You can switch between years and months, and you change your rate. So if you're using months, your interest rate needs to be monthly, but that's going to assume monthly compounding. Have y'all ever heard of APY? Annual percentage yield. So an annual percentage yield is going to assume some compounding period. So if the compounding is monthly, the APY will be higher than the rate versus the compounding's, annual. All right. Let's try another one, but let's do it in months. Let's do $2,000 in 10 years and 3 months with a 6% rate. But do this one entirely in months. This is a present value still. And do it entirely in months. Don't do it in years. I mean, in years it'd be 10.25 years, but let's assume monthly compounding. Can someone give me that then? What's the formula then? Barbara, can you do that off the top of your head without, just tell me everything to type in?
Yeah. 2,000. Divided by 1 plus 6.
You're doing it monthly. So.
Oh, yeah, sorry. You need one more parenthesis?
No, you can do it right here.
Okay, and it was divided by 12.
All right.
And then close to the power of 120. No, sorry. Oh, you need months?
It's in months. So 12 times 10 plus 3.
Yeah.
So you can do 10 times 12 plus 3, or you can just do it in your head. So 123, right? So that should be it. That's going to assume monthly compounding. Now, why didn't I have to put a parenthesis here? Y'all remember your order of operand?
Yeah, because
You always do division, multiplication first, and then you do addition, subtraction. Y'all probably seen on Facebook where they say, 6 plus 5 divided by 3 and all that, and they'll get all different answers and all that. The reason it gets confusing is because the divided sign, that's line with the 2 dots, we don't know if it's what's above the line and what that divided sign's not long enough. You're supposed to be using, the line, then you know what's in the numerator and what's in the denominator. So it's really confusing. But you do multiplication, division first, or do exponents first, then multiplication, division, then addition. All right. Were you able to get 180, 10, 82, 94?
I got the correct answer in using the present value.
Oh, really?
Formula, yeah.
So tell me how you did that, because I need to learn that.
So this one came out easy first. Well, could I go to formula and then click financial so there's a little pop up?
Okay.
So I can see
So you're doing financials. Okay. All right. All right, you want me to say okay?
Yeah. And then rate is 0.36.
Are you putting 6% or are you putting divided by 12? So can you actually do that in here?
Yes.
All right.
Divided by 12, and then enter is 123, 123, and then future value is negative. Future value.
Oh,
Yeah, I put I put negative 2,000 because that's what the negative.
that's why I was getting negative numbers.
Yeah.
I don't know what the number type means. Type. Oh, if it's beginning period, end period.
Yeah.
I didn't see any of those on the exam. That does get really confusing, but the ones on the exam are all assumed to be in the period.
Yeah, I think comes out different than mine. Oh, you divided by 120 at 12.
Oh, there you go. All right, good. Now the question is, what does that look like in the formula? So let's look at the formula.
So it leaves the payment blank.
There you go. So instead of doing 0, 0, 0, 0, okay, so we solved the problem. Good. So I'm learning Excel here. And I'm just going to tell you my trick in Excel. I always build everything out because my brain wants to know what the calculation is. So I don't like functions. I prefer to type it all out. And so I'll learn the functions. Even though I know the functions, I prefer to type it all out. I want to have control over that. So my brain is thinking, oh yeah, I'm dividing by that. Because with this, you don't really know what Bill Gates is doing, do you? He's doing something there, but interesting. So, all right, good job. All right. So I don't know if y'all saw that, Jay and Kevin, but that's how you do the present value. For some reason, it has to be a negative number in the future. I'm not sure why they're assuming that.
So if it's like the last problem was like 5 years, 6 months, you just do everything into months. Like
Yeah, so present value 0.04 divided by 12.
yeah. And then,
It was
was it 5 years, 6 months?
66, right?
Yeah. And blank, and then you got a negative, whatever.
Forget what it was. Was it 1500? Great. I feel good. I learned something new here.
Nice.
All right, so we have figured out how to do it 2 ways in Excel, but I would say type out the formulas. Just know the formulas.
Yeah.
All right, let's try some future value then. So questions on that? Y'all see how you do present value? I don't know if I remember seeing too many questions like that, but it's possible you'll get one like that. So our goal next time is to figure out how to do it on the calculator. All right, future value to me is a little easier because you're multiplying it. So it's the cash flow times 1 plus the rate to end. Looks exactly the same. But if you think about it, it's just algebra. Because what is this cash flow here? It is the future value. So it's just algebra. So it's not really a new formula. So the present value equals the future value divided by 1 plus I, or the future value equals the present value times 1 plus I to the end. So it's the same formula twice. Just moving it to the other side. So let's try this. Let's say, what is the future value of $1,000 invested today in 10 years at a rate of 5%? So you're going to invest $1,000 today. You think you're going to make 5%. And so what do you think will be in your bank account in 10 years? So I'll do the first one, 1,000 times 1 plus 0.05 raised to the 10. I get that. Is that what y'all got? 1628.89. I did see a few of those on the exam. Now here, would you say 10 years, but with monthly? Well, if you're buying a bank CD and there's an APY and it's monthly compounding, that will tell you more. How much of a difference does it make? So let's do this. Alvaro, do it. Let's do it where there's monthly compounding. What would you do then? $1,000 times, what's my rate now? 1 plus 5% divided by 12, right? And then what is my N? 10 years, 120. Is it going to be higher or lower than 1628? A little, yeah, somewhat higher. Maybe not radically, but a little bit higher. Now, I didn't see the E function on the exam, but the E function is continuous compounding. Did y'all use that in your classes? You remember that well? So continuous compounding, it just means that it's like infinity. The reason you do that is it's kind of that old theory of if you're 10 feet from the door, then you go 5 feet from the door, then you go 2.5 feet. Eventually, you just get to the door. And that's what the E function is saying, because we're going out to dollars and cents. Eventually, you just get there. And so it's actually not a massive number. So that's why with a bank CD, let's say the stated rate, say is 4%, what would the APY be? Well, the APY is going to be 1 plus 0.04 divided by 12. Can you finish that one up? So an APY is an annual rate. So there's 1 year. How many months in a year? 12 minus 1. And will you get more than 4% or less than 4%? You'll get more, right? So that's what the APY is. So if you see a bank, if y'all have seen that, the APY, it's just giving you that compounding. So if you buy a bank CD and you reinvest all the interest back into the CD, you'll actually end up with 4.07% return because you're earning interest on the interest. If you take the interest out every month, you're gonna make 4% because you're not gonna get that interest on interest. So that's what the APY is. So there's a stated rate, and you can go to bankrate.com and see this. I can't remember if there's an APY question on the exam, but do get really comfortable where they're using monthly or annual type of numbers. All right, let's try this. Bob wants to buy a car in 5 years. The car today costs $25,000, and he expects inflation of 2.5%. How much does he need to save to buy that car in 5 years? Y'all see how this is a future value problem. We know what the car costs today. So here we can use future value as a forecasting tool. All right, anybody have any idea on that? Kevin, Jay, Camille, Alvaro?
Yeah, I'm still on. I got it. Yeah, I don't know how to do it.
Well, we are videoing it. So Camille, if the machine's messing up for you, you do have the video, so you can go back and watch the video. We'll put that out there. All right, so Alvaro, you want to try it? Huh?
You said you have a video?
We will have this video on YouTube by Saturday, probably. So the car is 20, so the present value is 25,000 times, what's my rate here? 2.5, and my time?
5 years.
5 years. So he thinks that car will cost 28,000. So if he's saving money for a car in 5 years, he can't just save $25,000 because he's expecting cars to go up. So he's going to have to save an extra $3,000. Now, when I do inflation and forecasts, it's always annual. I never do, monthly compounding. It just doesn't make sense to me. So anytime I do inflation kind of forecast, I just use the annual rate. All right, let's try another one. If you invest $500 today in a 5-year CD with a stated rate 4%, compounded weekly, what will the final balance be? All right, so y'all can put that in Excel. Sorry. Yeah, so it's weekly compounding. So the bank's going to pay you interest on interest every single week. I don't know if you can buy $500 CDs. That may be too small of a balance, but we'll see. You might want to try it. Any takers? $500 times what? 52, yeah. 5 times 52, yeah. So is that what you got? 610? Yeah. All right, let's go back and see if we can do these using the future value function. That was a good idea to use the
Yeah,
function.
that's what, like, for example, right here, I've been using this whole time. Did you share something?
Does it work essentially the
Because
same? Huh?
we do know the present value,
Yeah,
right? So that's,
yeah, the present value is whatever I started with, yeah. All right, so our rate in that very first one was 5%. Our number of periods was 10.
present value is negative 1,000.
Yeah, I wonder why you always have to do it.
Next one.
Oh, yeah, we'll talk about the payments later. And yeah, it's the end of the period. Let's see if that's what we get. Yeah, that looks good. Let's do it again, but this time we'll do it monthly. Oops, divided by 12 times 12. Yeah, all right, so yeah, we've solved two things. I was like, we're going to figure out Excel, but we figured that out. Thanks, Alvaro, so we're in good shape. We need to research why it needs a negative number, but
I vaguely remember being told why. There is a reason.
yeah, yeah, it's probably, they're probably thinking net present value, which means it's, well, I don't know, that's kind of strange to me, kind of an I don't know. Who knows what Bill Gates is thinking. All right, so we got it. What about this one? This one should be even more straightforward. So equal future value, the present value, I mean, the rate is 2.5%. The present value is 25,000.
The period.
What's the period
Yeah,
first? 5. Then the 25,000?
No, blank.
Oh, another
And
because of
then-
period. And then minus 25,000, like that. Ah, all right, good. So it's the rate, time. If you have multiple, you'll have to put multiple time, but usually we only have one, so 5 years, and then comma, and then the amount is a negative number. Now, one thing you might try on the exam, if you're in Excel, is to do it both ways.
Yeah.
And get practice doing it both ways, and you can double check your number, make sure you have it. Now, usually if you plug it in and you get the same answer as the exam, you're probably gonna be pretty confident. Kevin, Jay, I don't know if you have questions on that. But oh, I'm sorry. There's a chat and I wasn't following it. Yeah, so Jay, sorry, hopefully we answered your question. Sorry, I just realized the chat was going. So the N, if it's annual compounding, just do it in years. So if it's 10.5 years, you just input 10.5. If it's monthly compounding, then you need to enter it as 126. So 10 years times 12 months plus an extra 6 months. And then your interest rates needs to be the rate divided by 12. So it all depends on the compounding period. If the compounding period's annual, do everything in annual terms. If compounding period's monthly, your rate and your time needs to be annual, in monthly terms. And you'll get slightly different numbers because of that compounding effect. So you got to read the question real carefully to see. They should have to tell you. Most of the problems on the FAC exam assume annual kind of things. In fact, they even do the bonds as annual, which is very unusual because most bonds pay twice a year, not once a year, but they even do the bonds as one payment a year. So, right, so that compounding is important. And if you do it the wrong way, you're going to be off materially enough that you can get the wrong answer. I don't think on an exam you're going to have that issue. So usually on the exam, if the exam answer is 28,285.21, you're going to be pretty confident you got the right thing, because the main thing you're worried about is a typo, and it's unlikely you're going to have a typo and you can get one of their answers. So, all right. So those are on the exam. There's usually 2 or 3 of them like this. So if you can handle that kind of thing, either in Excel as a function or manually, you've got it. The more powerful part are these. All right, so this is one we're going to have to figure out how to do it in Excel, but let's build this up. So I love doing this in a spreadsheet. So everybody, let's start this so we're all together here. I forget what time does this class stop? 230, 350. Oh, we're almost out of time. Let's set one up and then I'll show you how it works. And the next week we'll spend more time on this one because what I'll do next week, I'm going to go through the fact and find questions that relate with what we just did, the present value, future value, and I'll give you a few of those. So beginning every class, we'll just do some practice and then we'll get more into this. So what you do is you put everything in there, rate, time, amount borrowed, because usually this is a loan schedule. So let's just do one. Let's say Bob bought a $50,000 car from the bank. Monthly payments for 5 years at 6%. All right. So the rate is what here? 6%, but it's not 6%, is it? Because he's making monthly payments. So what's our rate here? 6% divided by 12. What's our time? 5 times 12, right? And how much is he borrowing? $50,000. We'll do this some more next week. So if I'm going too fast, we'll do it again. All right. So let's put the PVFI in here. So you got 1 minus 1 divided by 2 parentheses 1 plus the rate raised to the time divided by the rate, and we should get something that is less than 5. So the present value interest factor should be less, well, less than 60. Should be less than your time. The future value should be more than your time. So if we get something like 52 or something around there, we should be pretty close. You'll generally see a interest factor in 4 decimal places. And I think you probably saw that in your accounting books, and I think that's because we're in dollar and cents. We go out 2 decimal places, and if you go out 4 decimal places on your factor, you're probably not going to have any rounding problems. All right, let me do it real quickly, and next week we'll do this not so fast. So you have time, you have the beginning balance, you have your interest expense, you have your payment, and you have your ending balance. I'll show you how to do this. So what is my payment going to be? So if you go back and look at the formulas, and we are almost out of time. My payment, I've got the present value. What was the present value in this problem? It was $50,000, right? That's what he's buying the car for. We've got our factor, right? So what's the only thing we don't know? It's the payment. What's the payment going to be? It's going to be the cost of the car divided by that factor. All right. So if we go back in there and we say, okay, the payment is going to equal the cost divided by the present value interest factor and annuities. So in this case, it's going to be 50,000 divided by 51, whatever. So we're going to make payments of 966 ending balance. So my time, I'll start with month 1. What's my beginning balance? I owe $50,000. What's my interest expense? The interest expense is that beginning balance times my rate. What's my payment? 966. What's my ending balance? Y'all know how bank loans work. You have your beginning balance. What do you do with the interest expense? Do you add that to the loan or subtract it? You add it. What do you do with the payment? Subtract. If this balance better be less than 50,000, or we're never going to pay off the debt. All right. And the next period, we add another month. What's my beginning balance? It's my ending balance. My interest expense, I can just copy that down. It's just that beginning times that. My payment, I can just copy that down. It's always going to be the same. Copy that down. How many periods do I go out? About 60, right? What do we want that very last cell to say? We hope it says 0. And there it is. We paid it off. All right. I like to do this on the exam. You don't have to do this. There was some questions on the exam. We'll have to talk about this. What is this balance at the end of 9 months? So we'll have to figure out how to do that if you're not going to build this whole schedule. All right. I like building this whole schedule because I can visualize what all is going on. All right. So we'll do more of this next class. So next class, what we'll do, I'll give you some more practicing on the present and future value in exactly the formatted exam. So you can see what the exam's asking for. And then we'll spend a little more time. we can do a whole lot more with this present value and future value of annuities. So, all right, so I'll stop it there. Thanks, Kevin and Jay. All right, so last class, we talked about how to get the capital IQ. Let's do that again, just in case we have more people here today than last week. So if you don't know how to use capital IQ, so you just click on, you go to utsa.edu. And y'all tell me if I'm going too fast here. So utsa.edu, click on My UTSA. And you want to go down to the library homepage. There's probably a faster way to get to the library homepage than all those. Go to library homepage and then go to databases. When you go to databases, click on the C. And just go down until you find capital IQ. All right, well, let's all catch up with me. Find capital IQ. And you click on it. Here's the tough part. You have to use your .edu email. I don't know how that went this week for students.
Nightmare.
Was it?
It's
Yeah.
been an hour to cover my login.
Yeah, I'm wondering if students are getting emails from my class now.
I
And-
haven't got any.
And then you put in your password, but you got to get set up. Sometimes it takes a while, so practice a little bit. If you can't get it to work, I've got the file. I'm going to show you the file. I'm going to share the file with you. Today, we're going to do some work to get it going. So I'm going to sign in. And so I've got that, and then we're doing cost code. So you just type cost code. Now be careful, there's more than one Costco. There's one overseas that I think in India or China, there's another Costco out there that's a big company. So we're doing Costco here, which is the COST. So there it is. You click on that. And I just like to click down on the financials and just maybe income statement or something, but just click on something. This will come up, and I take the year and just bring it all the way back as far as it'll go. So here I got Costco, and right here it says download financials. If you click on that, it downloads every single thing they've got. It's kind of nice. I like that better than what Bloomberg does. Bloomberg, you got to do page by page by page. So Kevin and Jay and Daniel, y'all should be able to do that from home as well. If you've got a UTSA.edu account. If you don't have a UTSA.edu account, you'll have to use our spreadsheet once we get it going. All right. So what we want to do, get rid of that. So here's the data that comes from Costco. All right. So remember, what's the very first thing we're going to do? We're going to do a forecast. What's the most important thing we're going to forecast? Revenue. Yeah, more than anything else is revenue. So let's go to the very end of this. Well, I don't know. Let's go to the beginning. I'm going to put it at the very beginning. Let's add a sheet at the very beginning, the very first sheet, and we're just going to call it revenue forecast. I could not find anywhere in Capital IQ where they break out the retail revenue from the membership dues. I wish I could find that. I have to research that a little bit more, but that would be nice to know, right? What is the membership dues? What is the actual retail? So we'll probably have to link that together. But here's what I want to do is I want to bring in their revenues and I want to bring in their stores. I want those two pieces of that information, all right? Because I'm going to use that to drive going forward. So revenue forecast by far the most important thing. All right, so let's go get some revenues from the income statement. Now you don't have this Costco file, do you? Or did y'all get it to load?
I have
it. Okay, hopefully you have it. If you don't have it, you'll have to just watch and I'll get this file to you. So we go back to 1991. We probably can't go back that far, but I'll go ahead and load it up. So 1991, I've got $12 billion in revenue. Let's type 1991 up there. And then we'll do 91 plus 1, so we'll just bring that across. We should just be able to copy that across, right? Let's make our column with, I don't know, 12, that'll be enough. All right, so we can copy that across to 20, boy, I don't know how far out we can go. Wow, 2021's even there. All right, so out to 2021. Y'all let me know if y'all got that far. And y'all online, we'll have to maybe go off mute and speak up. And get rid of some stuff here. Word is not. Well, I don't know how to get back to the Zoom. And I don't know if I'm sharing, so I may not be sharing. So Zoom guys, are y'all still there? Why won't it let me go back to Zoom?
It works. It works.
Yeah, it won't let me get back into Zoom. I don't know if there's, are any of y'all on Zoom? There it is. Oh, it's over here. Boy. You can see the screen? All right. There it is. All right. Sorry, guys. I'm on two screens and it's confusing me. My typical bad technology. All right. So you've got the revenues. So now we need the stores. Probably we're not going to be able to get stores for every year. I forget where the stores are, but I think it's on industry specific. I think that's where the stores are, industry specific. Total stores, they don't have total stores until a few years in, so we'll have to just copy that across. So they don't have it at the beginning, but so industry specific B21 gives us the stores, but we just don't have history back that far.
Total stores, right?
Total stores. Now, do we need beginning, added, that kind of stuff? We'll see. We might go back and get more sophisticated, but for this time, I just want to bring that in. All right, so we don't have data every year until 1998. So why don't we just hide the rows up till 98? All right, so what do we want to know? Okay, so let's look at revenue per store. All right, let's try that. That's pretty easy. So our revenues are in millions and our stores are in whatever, all right? That's 24 billion. So 24 billion. So it's right. I got six zeros I need to add, but so 24 million billion times a million divided by our stores. 87 million per store. Does that seem right? Think about a Costco. Do you think a typical Costco store generates? That seems way too high. But I'm pretty sure that's $24 billion, 278 stores. Is that possible? What is that on a daily basis? Do you think they do about 240,000 a day at a Costco? That could be possible. I mean, this is back in 98, right? Yeah. Well, we'll go with it. We'll go with it. I don't think there's an error there. All right, let's copy that across. Let's just see what that looks like. It's certainly growing every year, almost every year. That sounds awfully high to me. $239 million. It seems. A Chick-fil-A, yeah. So 239 million in one store just seems too high to me. It's certainly not 278,000 stores. that's certainly not the case. All right, so someone's in the chat here. Well, yeah, I mean, this is a high revenue product, no question. So I'm going to double check it. How am I going to double check it? Well, I'm going to go into Bloomberg. Y'all can't get into Bloomberg, so you just have to watch me. So I don't want to get into this and find out I got an error somewhere. All right, so we want to make sure we have this right. That seems awfully high to me. You know, probably part of the problem is I'm so used to revenue per square foot. And now I'm doing revenue per store, and these are huge, huge, huge stores. So that could be part of it. So we'll see. Maybe you're okay, but boy, that seems like a lot of revenue. The other thing I want to do is the change in stores. That's going to be pretty important. So we can't do that in 98, but we can do that in 99. So they, you know, I read an article that said they add about 25 stores a year. So let's see if that's really true or not. Let me look at the average over the entire time. The average is 23, so that's about right. And that they're very, very diligent about it. It's pretty consistent. They add 25 stores a year, so that looks pretty good. All right, so did my Bloomberg come up? Yep, there it is. All right. Oops, wait, what happened? All right, boy, too much technology for me. Yep, and nothing happened. Frozen here, why are we frozen? All right, everything's frozen. Let me show you something else while I'm waiting for that to somehow correct itself. Yeah, it's completely frozen, isn't it? I wonder if Bloomberg has some kind of thing that says you can't use Bloomberg while you're on Zoom, but I don't think that's the case. I think I've used Bloomberg on Zoom. All right, let me show you something else I have. So we're going to project their revenue by forecasting their number of stores and forecasting the revenue per store, and then we're just going to multiply. All right. Getting the revenue per store is probably not going to be too difficult because it's probably going to grow about with inflation. It's probably not going to be that radically different. All right, let me try one last time. That looks better this time. Oh no, I'm completely kicked out. All right, sorry guys, I can't do it. I can try it. I don't think it will let me do that. Let's see if Bloomberg will let me do it. Yep, not like that. All right, so crash. Yeah, that's crash. All right, sorry, we'll have to do that next week. So what I wanted to do is go on to Bloomberg and double check that revenue per store, but I'll do that on my own. So Bloomberg does have revenue per store, and we can double check that, but can't do it today. All right, so let me show you this other spreadsheet. So for Costco, we got to figure out how we're going to forecast number of stores. We can just keep them doing 25. Well, what's the problem with doing 25? Because eventually there's too many Costcos. So here's the question I would ask is how many Costcos can a state hold? So here's Texas. Texas has 34 Costcos. That actually sounds kind of low to me, but 34 Costco. How many are there in Texas and San Antonio? Got to be at least 4 or 5, right? Just in San Antonio, Houston's got to have 6 or 7. So 34 sounds low, but I got this off of Costco site today. There are 28 million people in Texas. So there is a Costco for every million people in Texas, or 1.2 Costcos every million people. How many people in San Antonio? 11 million. So there's probably about 12 Costcos. And someone look up how many Costcos in San Antonio. I think it's about 12. Well, San Antonio surrounding areas. So yeah, 11 million might be a little much given that Texas is only 29 million. I doubt San Antonio is 1/3 of the state. So maybe 2 million, so maybe there's 3 Costcos.
I'm showing 4.
4.
Yeah.
Well, what's San Antonio's population? I probably got that too high. So if San Antonio's population is 2 million, then 3 or 4 sounds about right. So,
2.368.
okay, so 2.368 million times, divided by, wait. So 2.368 times 117. So there should be about 3 or 4 Costco's if they're normal.
Therefore,
Let me get the average. So it's about 1.7. Let me get the median. The median might be 0, but because there's a lot of states. Can you imagine there's states out there without a Costco? So 1 to 1.5, 1 to 2 or so Costco's per million people. And there's some states that don't have any, but then Wyoming only has 578,000 people. West Virginia should have a Costco. There's some, Alaska has a lot of Costco's. That's interesting. Arkansas doesn't have enough. So it's not all that. Wow, Hawaii has 5 Costco's. That's pretty wild, isn't it? I can imagine Honolulu has more than 1, but maybe so. Idaho has 4. So it's kind of all over the place. The other thing we have to look at is overseas. And so I found this today. As of March, Costco has 804 stores. Now, is that close to what we have? I'm always like double checking my numbers. What do we have? 817. So that's probably close enough because it's different months. 804 warehouses, 558 in the United. Well, no, that's way off, isn't it? 558 in the United States. Well, let's see. 558 in the United States equals some. I'll see how I'm always leery of data. 565, that looks pretty good. All right, so I'm okay. And then the other one said 800, and that was all store. All right, so we're getting consistent numbers here. That's good. 103 in Canada. Well, that's pretty interesting. What's the population of Canada? Someone real quick. 38 million. We said 103. So they're not very saturated at all, are they? If I did the math right. Here, let me do it. Let me do it correctly here.
Really quick on the for Excel, why do you do equals and sometimes plus and sometimes equals?
Well, I do equals because I'm over here. I usually do plus because I'm usually on the 10 key.
Is there really much difference in terms of?
It's about
functionality?
2 seconds.
Okay.
Yeah,
Oh, so that's
it's
just quicker for you. Okay.
yeah, it's just faster because I don't have to reach all the way for the equal sign.
Yeah. Okay.
All right, let me do this again. All right, so there's 38 million people. And how many stores did they say? 103. So let's just see if that seems reasonable. I'm always, boy, this is something I learned in my career is just always make sure what you're doing is reasonable. All right, so I actually did the math wrong. So they're actually pretty well saturated in Canada already. Okay, where else are they? In Mexico, there's 39. So we can do the same thing with Mexico, the UK. I'm surprised they're in the UK, given how much struggles some other stores have had there. 27 in Japan, 16 in South Korea, 14 in Taiwan, 12 in Australia, 3 in Spain, 1 in Iceland. That's kind of interesting because I doubt there's that many people in Iceland. 1 in France. They do have 1 in mainland China. That'd be one to go research and just see how that's going. That's got to be somewhat experimental. And just how is it working? What country stands out that's not in there? It's going to be bigger than China here pretty soon.
India.
Yeah, there's no India, so that's interesting. India is a hard place to do retail. They don't like non-Indian companies in their country. So if I'm going to forecast Costco, first I'm going to have to go read their growth story. So I'm going to have to hear from management. I don't know who the CEO of Costco is. Should probably look it up, but I might want to go out and do a Costco CEO.
Craig Joe.
Costco CEO, I will kill you. I don't know what that means, but all right. I want to hear the Costco CEO saying what he or she thinks their store plan is. And they're pretty explicit on that. And this is something probably even, they're probably clearer on it than Walmart is. They've got an issue because you can't, where I live, there are 3 Walmarts within like a 5-minute bike ride. You can't do that with Costco. People will drive 10 minutes to get to a Costco, but you don't want 2 Costcos within a few miles. And I don't know in San Antonio how spread they out they are. So we got to ask some of the question of saturation. When do they have the US covered? At that point, they can only grow with population growth. So if we're going to say there's going to be 1 store for every 1 million people, then you're going to have to add a new store once the US population goes up 1 million. Once you get saturated, so you're going to have to ask that question. Boy, he doesn't look good on camera, does he? It looks a lot better here. They just caught him at the wrong. I did that once with the YouTube, and YouTube gives you the video, and boy, they caught me in the worst possible. Like they did that to him. Someone should have changed that picture. So when it comes to forecasting, I want to hear what management says. Costco is a very, tell you everything kind of firm, and this is a big deal for them. How many stores do they add? So, I'll try to do some research on that and see what they say. I don't see one that says that. The best thing you can find for these YouTubes, and especially the COVID has helped a lot, are investment conferences. If you can find the CEO or the CFO speaking at an investment conference for like 25, 30 minutes, that to me is the ideal. That's what I love. Y'all were talking about conference earnings calls. Maybe they talk about new store additions in an earnings call. That's something else we can do. So yeah, it's all over the place. He's getting up there in age. Well, it's hard to tell. He's about he might be younger than I am. So Craig Genelec.
He was born 52. So
Oh, he's 10 years older. Well, actually, he looks pretty young then. He's 10 years younger than I am. I mean, older than I am. He looks my age. So we can put more specifics in there and see. It doesn't look like I brought anything new up, but that's the kind of thing we're doing. We want to say, what does management think? And then what we want to do is drive off of that. Is that reasonable? So we saw in Canada, they're pretty well saturated in Canada, so we're probably not going to see much growth there. China with 1 store, boy, I want to know how that store is doing. Is a membership kind of, and are there other competitors in China that they're scared of? I mean, Costco is an incredible firm. I really love them. They just know what they're doing, but that doesn't always mean it's going to work in Japan or in China or in India. And so those kind of things we're looking for. So in order to get this growth, we probably want to break this into how many pieces. Do you want to do US and Canada, or do you want to just do North America? You want to break out Mexico? You want to put China in there? You want to do the rest of Asia? This is the kind of thing you have to think through. And then you have to see, what is the CEO saying? And then also ask, what would you do if you're the CEO? Obviously you want to grow in China. That would be your ideal. Let's try out Japan just real quick. I'm just interested. How many? There's 27 in Japan. Someone give me Japan's population. It's a pretty high population.
125 million.
Yeah, so I don't think they're anywhere close. That's almost, a third of the US. So they're not very well saturated in Japan. There could be a cultural thing that it just doesn't work in Japan. It could be a fact that it's islands and, who knows. Any other big ones? Okay.
Australia. Australia's 25.6.
Yeah, so they're with only 12. Well, let's see.
About 0.5.
Yeah, they're probably not. I don't know if I'm going to be in Australia right now. You can't even ride your bike outside. So it's 12. And what was the population?
25.69 million.
Yeah, it's gonna be a really low number, but higher than Japan. What was Mexico though? Mexico's one I think it's an interesting one.
It's 128.9 million.
Wow, they're bigger than Japan. Wow, word. I said 29, if I saw it right. Wait, is that two? No, 39, all right. Are you gonna give me that number again? 129?
128.9.
Oh, that's interesting. Mexico has more people than, you would expect Mexico not to be as, it's more rural and it's not as wealthy as Japan, so you'd expect it to be a lower number, but it's actually higher than Japan. So this is the kind of thing I do, and then, you got India, the rest of Asia. Yeah, Europe. So how do you do Europe? Do you do UK and then Europe? So we have to see what are they doing? Have to look at the populations. Do you think in 50 years Costco is going to be as saturated in Europe as they are in the US or not? That's the kind of things you're asking. It's easier to think of that with McDonald's. So this would work a lot better with McDonald's because we do think McDonald's, is going to be pretty global. I'm not sure about a Costco, how well that works. And the other issue is, who are the other competitors? So sometimes there's massive competitor. You think about Alibaba in China, that really limits what Amazon can do there. I would do the same kind of thing with Facebook. Country by country by country, how many accounts are there versus population? How much is it growing? How popular it is? What's the bandwidth in that country? So you're not trying to get a precise number. You're trying to get kind of the lay of the land, the ballpark of what's going on. So we have to decide in our forecast what level of detail we're going to have on these stores. The other question we have to ask is revenue per store in the country. We may not be able to find that information, but is the store plan in China the same as the store plan in the US?
Costco's one warehouse in China has 200,000 members.
200,000 members. Is that higher than the US? I wonder what the US.
68,000 is the average.
200,000. Yeah, things are bigger in China, that's for sure.
Adjusted for like per capita, is that same as the US almost?
Well,
They have
do 200,000 people, do they just go 1/4 as many times?
Yeah.
Or is it just a really crowded store? So yeah, I don't know.
where in China is it?
Probably Beijing or some major city.
It's a super high density.
And China has a lot of New York cities. It's pretty amazing how many.
Compared to
I like the Asian population.
Yeah, Japan is definitely a dying population, and that's the other thing you do. If you do this by country, you also have to look at the population growth and see. That's why I think Mexico is so important, because Mexico is growing faster than Japan. So, Japan, you may not add many more stores at all, but Mexico, you definitely see that population growing. But
Is that the typical target market, like 30 people in 30?
oh, 30, yeah, with family, with kids, yeah. So those are the kind of thing you're looking at. I mean, it's if you're going to do a really good forecast, I don't know if in here we'll be able to do that because we may not be get our hands on the data, but that's the kind of thing you're asking for. I'm going to make the assumption that their stores are all pretty much the same as far as the revenue per store, but it would be interesting. I know with Walmart, the revenue per store and the gross margin per store is very different in the US versus in Latin America. So that may be the case here, but we'll see how we handle that. All right, let's look at the revenue per store. The thing I want to do here is I'm going to bring this down. I want to date the change in the revenue. So I expect that to be about inflation. Let's see, on average, it's gone up 4.6%. So it's actually been pretty strong. So their revenue per store growth is pretty strong. Has it tapered off in the last few years? Well, then you get COVID, right? You got that massive increase for COVID. So that we probably have to bring back down. You also have to think about, what are they selling? Is it groceries? Is it flat screen TVs? Is it clothing? What exactly are they selling? The other thing is, and I don't know if y'all can figure this out, but what has the membership fee been over time? Have there been jumps in that member fee? And so that's another thing we can Google. I really wish we could get just the membership fees separated out. Membership fee history. Fee increase, here it is right here. I found the site. I don't know how accurate this is. It's called Costco Insider. That sounds like something we might use. So 25, 30, 35, 40, 45, 50. Let's find well, it's $5. Boy, they're pretty consistent. Would this maybe help us in our forecasting, you think? If this is accurate. Boy, it's like every 5 years they go up $5. Why $5? That seems very uneconomic, right? It's they're a declining percentage increase. When you get up to $1,000, it's not going to be much of an increase, is it? So, but that's really interesting. So hopefully that's accurate. We'll see. So just to give you a sense, I mean, this is what forecasting is all about. You just logically think through what a firm is doing, and you're trying to think, what are all the pieces, all the moving pieces. So let's find a year where it jumped. So it jumped in 92. I don't know when in 92 it jumped, but I'm wondering, oh, we don't have 92. I'm wondering if you notice, where did it go? Boy. Let's see, 2011, it went up $5. Did we see a jump in revenue in 2011 that was unusual? No, it doesn't stand out. We don't know when they jumped it. It could have been November, December. You see a big jump in 2012. So maybe they did it late in 2000. Maybe they do it during the holiday shopping season when people aren't even thinking about it. So I would probably put that in here somewhere, but again, well, I don't know. Will, you found someone that showed number of members, so we can probably find number of members somewhere out there, right? So we could probably figure out the member revenue ourselves. So if we can find a website that shows that, that would be interesting. So let's think of that as a number. We'll put that in there. If we can figure that out, what I like to do is actually take the membership revenue out and forecast that separately from the retail revenue, and actually have a dual revenue. Actually do revenue per store X the membership fees, and then the membership fees. From Will's point, it's stores on number of members per store times the fee. That gives us the fee, and then revenue per store without the fees gives us the revenue the store going forward. So, all right, what else are we missing in here? So we got to figure out how we're going to stratify it. We got to see if we can break out the membership fee from the retail revenue. We can look at the number of stores and just see if there's how consistent that is. It jumps around a little bit, but generally it's between 20 and 30. So that 25 stores, I've read that that's really what they want to do is 25. They're not like Starbucks and they want to do a new store every 8 minutes. They don't have this massive growth story, so that makes it a little easier to forecast. I don't know what happened in this year where they added 50 stores. That's kind of unusual for them. In fact, 30 looks like a high year and 10 looks like a low year, so fairly consistent. If we did this with Walmart, I think we'd find a lot more jagged.
Bloomberg breaks out like the revenues between like warehouse and then like the membership.
They do, so we may have to dump it from Bloomberg.
I want 2.2% every year of the revenues is just membership.
Yeah, we find it's that consistent. Can you tell when the fee changes though? Does it jump in those years? Because $5 all at once, that's a pretty big.
So Bloomberg only goes back to 2002.
Yeah. So
unless you give me something after, like where it jumped $5.
But we can handle that. We can break it out starting in a certain year and see. So, all right. So I want to do a little research on my own to go try to find some of these things, but we'll have to decide here on the countries. You also think about that. How do we want to break this up? What about the rest of Latin America? What did it say? Latin America is a pretty important market, I would think. And I only say that because when I go to Costa Rica, Walmart is taking over that country. That seems like that'd be pretty important, but the only Latin American country I see is Mexico. Why aren't they in Colombia and Chile and do we want to think about them doing that? That's what we got to hear from the CEO to see if they would actually do that. Peru, probably not Venezuela right now, Argentina right now. There are some countries really struggling. Brazil, there's none in Brazil. Do you think Brazil would be a good market? But they certainly have Asia, South Korea, Taiwan, Japan. Europe is really light. Why are they so light on Europe? There's only UK and Spain, right? Or France. 1 in France, 3 in Spain. Why aren't they in Europe? Is it because there's another competitor there they just can't get around? It's just not part of their strategy. Will it be part of their strategy? All right, so I'll try in the next few days on my bike to listen to the CEO of Costco and see if we can get some sense of what his plan is. Now, the simple forecast is just saying, well, add 25 stores every year. That'd be the simple forecast. What I don't like about that forecast is at what point is he filled up? He's got too many. It's like I remember Damodaran talking about a student doing Netflix and had this forecast out, and Damodaran pointed out that, you've got more Netflix accounts than you have people living in the world. That's going to be a little bit tough forecast to hit. All right, let's, what time, when does this class start? Let's see, 1:45, 2:30, 3:15. So we stop at 4. All right. So what I want to do next week is I'm going to flesh this out. So essentially what we're going to do is we're going to figure some way to get out the next several years. So I want to forecast store openings. I want to forecast members. And we'll do that as members per store. We're going to keep that pretty constant, right? There's no inflation on that. I don't think Costco is going to try to increase how many members per store. And why wouldn't they? Right? If once you get to a certain level, what do? You add another store. Because you don't, there's a place where you have too many customers, the lines are too long. And Costco has pretty long lines. And have you been in a Costco in a while? And you're talking 5 or 6 in lines. So you don't really want to push that. I don't know what it's like in China. Could you find the floor plan in China, Will? Is it like twice as big of a store, maybe? So I would have a really constant members per store. And then the fee looks like we could probably guess on the fee based on their history with that adding that $5. Maybe at some point it starts to be $10. And we could do that. That's really simple. We just add 25 stores a year and we'd have it. But to me, I want to know what they're doing around the world. And I also want to know at what point in the US, what is the US population? So we say we have, what, about 350 in the US?
Somewhere there.
350 in the US, that would imply if you have one Costco for every 1.5 million, that would imply 525 stores, and aren't we already there? We have 558 in the United States, so we're essentially already there. So the question would be
329.5 million.
329. So we're actually so let's look at the higher states. So what do you think is kind of their max? They got some 3s and 2s. Let's do equal percentile. 0.2 maybe? No, went the wrong way, 0.8. 2.5, let's say if we do 2.5, that gets you up to 800 stores. Maybe that's their max in the US, 800 stores, 825 stores. So we could take the US, add 25 until we hit that 825 and just stop, or just have it grow with population, or maybe it grows one store. Those are the kind of things you can do. So I want to avoid that thing that Darren says, is that you got a story that just no longer makes sense. You've grown your company bigger than the entire world or whatever. So I always want to have those back of the envelope type of numbers that I can think about Costco in those ways. And I'm sure Costco thinks in those ways, right? They see a city that's 1 million people and say, okay, we can get one store there. They see another city with 2.5 million. It's like, oh, that's 1 or 2 stores. That's kind of the way they're probably thinking. New York City is probably a little different because it's so compact. I doubt there's a Costco in New York City. And that's a lot of people to subtract out of the state of New York. So if we looked at New York, it's probably lower. Yeah, it's well below some of the other states just because.
What's it called? Costco's China store is 108,000 square feet.
Okay, I don't know how that is versus a typical store.
The average is 146.
So it's about
About
the same size. So it must just be either really busy or they don't go to the store as often as Americans.
The average is between 80,000 and 250,000.
80,000. There's Costco's with 80,000. That must be Iceland.
Yeah.
All right, so we'll leave it there, but y'all see kind of the process here, right? It's a matter of just getting through the data that you have, and when you don't have data, you make assumptions. All right, so I'll save this. I'll have to do a Google Drive or something for us. So. All right, thanks. Once we get revenue, boy, it goes fast, especially for Costco, because Costco is so easy to forecast if you have good revenues.
Hello, everyone. My name is Victor Rodriguez. I'm here to teach about resisting censorship with blockchain technology. I want to thank you all for today for arriving, taking time out of your schedule to attend my class. I don't want to inconvenience you guys too much, but I'll go straight on it. First, I want to make a disclaimer. Oh, I gotta share the screen. Okay, let us. Oh, here's.
There you go.
I want to make a disclaimer about this class first, because it's very important, especially with the topic we're doing. And, oh, hi, Miguel. Wait, well, thanks for joining my class.
Yeah, no worries. I'm gonna sit in. Thanks, man.
Anyways, what I'm about to show you in this presentation is only to provide useful information, but it's not anything to provide any personal or financial advice. The information represented is tended to be consumed and used for educational purposes only. I'm not a financial, not investment, nor am I a tax advisor. I'm still a college student. And please consider your own personal circumstances and speak to professional advisors independently research any data information you may rely on, whether for making an investment or tax decision or otherwise. Now, in other words, be very careful, guys. You don't want to don't make the wrong people mad. Anyways, welcome to my class. And I have the attendance sheet on Google Doc Sheets. I want to post in chat. For all the online people here, but for the offline people, I'll see what I can try to do. Okay. Okay, I don't want to hold up the class too much. I'll just post it at the end of the class. Anyways, let's go over some blockchain terminology. For example, what the heck is cryptocurrency itself. Okay, fix that up. Anyways, blockchain terminology. I want to go over a couple terms. For example, Bitcoin, Ethereum, Dogcoin, Litecoin, Monero, etc. There's Ripple too. But there's literally hundreds of types of cryptocurrency outside in the market right now. You can easily buy in any kind of marketplace like Coinbase, Coinbase, Cash App, any other things. You have a lot of options nowadays to buy cryptocurrency. But the cryptocurrency itself are actually tokens. They're not exactly the blockchains itself. Those are it's a derivative from the blockchain, which are typically decentralized and open source. And the goal of the blockchain, of the cryptocurrency in general, is to enable the common person to be able to, without needing intermediary as such as a bank, to be able to exchange services and goods without much of the middleman. However, as much as the white papers like to see, try to imagine that the average person is going to use this, realistically, so far, the tax savvy or internet dwellers are only using it. If you guys remember in the early Bitcoin eras, sorry, in the early Bitcoin days, is that not a lot of people really knew about it, and those who knew about it are either mega internet nerds or just tech savvy people. And nowadays, a lot more people know about cryptocurrency, and I think that's a good thing. And what sticks it out from other earlier forms of digital money is that blockchain network utilizes a public ledger comprised of various wallet addresses. In other words, it's what's called technically a triple book accounting. Allows you to see what wallets has which cryptocurrencies and stuff. You're able to track down a lot of whales that way. And this peer-to-peer style transactions for individual wallet addresses characterizes most of the cryptocurrency transactions today. Although there are services that kind of act as intermediary, but I'll get to that next class. Yeah, so it's just digital money. Why is this important now? Why couldn't this be available earlier when the internet was publicly available? There actually has been attempts before Bitcoin became available to attempt to use the internet itself to easily bypass the banks or other intermediaries. It's basically a rough description, but it fails to account for the potential of blockchain technology. As I said, there has been past attempts to try to do this. Yeah, Liberty Reserve, Gold Age, and eGold. I remember eGold, but the other two are they came after eGold. However, they're generally known as digital gold. They try to, in a weird way, combine the safety of owning gold with the convenience of digital technology. And on paper, that does sound like a good idea. However, as you guys know in the news, the government tend to shut down those kind of services. Liberty Reserve itself was shut down in 2013, Gold Age shut down, and eGold itself was shut down too. Basically, there are allegations of criminals using it and other stuff that caused a large lawsuit by the government. I'd say it's a bit tragic because Douglas Jackson and the other teams of eGold tried to do all they can to get eGold back in the public, but eventually just got shut down entirely. Yeah, those early days. Ooh. Oh, welcome. I just started the lecture right now, but I'll give the attendance sheet at the end of the class.
Recording.
As I said before, why did the US government suppress these early digital currency services? As I said, there was a lot of allegations of criminals and criminal activity continuous raids from the US government, particularly from the FBI, which prevented the rise of early digital currency services. I mean, basically they always, like the government usually does, is complain about the lack of regulation and transparencies in the ledgers of these companies. And a lot of people interpret this as just government just suppressing the services to protect the banks. But to be fair, the government did have kind of a good cases there against these services, since there were a couple criminals who did try to use it. But then again, the government did kind of go overboard with these accusations. Basically, there was a fear that criminals and other unwanted elements would use these services to continue their illicit enterprises more efficiently. Basically, you don't want terrorists and criminals to utilize the best technology they have. It's usually a bad thing. Oh, chat. Oh, definitely Silk Road. Yeah, that scared everyone, basically. Silk Road, if you remember, was basically a marketplace in the dark nets, in a Tor browser. You can access it by the Tor browser, and you can easily just buy drugs that way. Oh, that day too. The founders of Silk Road, they got arrested pretty quickly. But during the time it was active, it made a lot of money. Oh, damn. It scared a lot of people. Drug dealers using the efficient cutting edge technology like that. Surely. Which raises a good question. How did Bitcoins and other cryptocurrencies manage to avoid being shut down so easily? Very simple, blockchain technology. The main problem of the previous digital services is that they are connected to a centralized financial grid. I mean, despite what the government said, things being not transparent, they're pretty transparent, very transparent. You can easily find them on the internet, and there's a lot of things you could, very accessible. Yeah, I agree, Michael. The Silk Road was a big deal. And who controls the fast and centralized financial grid? Government. They always do. And if you try to bypass the banks like that, you're going to set up a lot of. Oh yes, I'll get a slide sent to you guys. I'll collect the emails and attendance at the end of the class. Nice. Anyways, as I said, you try to bypass the intermediary services like banks and other mainstream service. Generally, you always attract the attention of law enforcement agencies, because criminals always try to hide their accounting and bookkeeping from authorities. I mean, which is why every decent law enforcement agency always has some form of financial department to track them if they try to do that. The most essential rule of trying to break the law is never bookkeep your criminal conspiracies. Here's a clip kind of showing that. You guys remember the TV show The Wire? Yeah, that's pretty bad. And continue on from the last slide. Bitcoin isn't really connected to a banking institution. It's a peer-to-peer technology. It's dependable, uses people you don't trust, or what the people in white papers like to call trustless technology. They like to use that term a lot to basically use it with people you don't really you don't want to use it typically on. And it's also the reasons why the Silk Road, which was a drug illicit service marketplace that I talked earlier about, adopted the use of Bitcoin. Basically started in its early run as a popular cryptocurrency. Yeah, it's really weird, isn't it? The most popular cryptocurrency right now was used by drug dealers online. Not a good image so far. That's the reason why everyone didn't like it. Why all the negative press on the early days of Bitcoin is drug dealers used it. Not a good image so far, but as a general rule, if criminals, terrorists, dissidents, people generally vilified by the government or in public are using technology or a platform, yeah, that technology is got to be cutting edge or very reliable. That it is. Anonymity is key. That's the key. Now, which brings a good question. Why would we want to use any cryptocurrency or blockchain to bypass the banks? We're not criminals here. Yeah, that's exactly right. We're not tech-savvy drug dealers either. We have to remember who determines whether something needs to be treated like one. You may not be a criminal or member of a fringe political faction, but you can still be canceled by a random demographic organization. Particularly on Twitter, it's very easy to get blocked there. Personally, I got banned from Twitter. I'm not a member of anything. they just randomly blocked me. So bizarre, like that's modern social media. They love to censor people without a fair hearing, and it seems like nobody's safe anymore. Someday we might be canceled. I don't know. Thus, it might be a good idea to get familiar with blockchain technology in case such things. You don't want to. That's the thing. If you try to build a business on a mainstream social media, you get canceled. That's going to really hurt you. You lose a lot of followers and a lot of potential income too. And so get on Parler. Clubhouse is the backup. Yeah, Clubhouse is good. They don't record anything. It's just a bunch of people talking. It's all audio. So far, it's a good social media, but it kind of it's a bit flawed. It seems a bit flawed, but hopefully it might be good. Clubhouse, that is. Now, I want to go over NFTs in last part, because I kind of just go over the early days of cryptocurrency and stuff, but I do want to cover NFTs, which is basically a non-fungible token. That's what the NFT stood for. It basically means that the token itself cannot be duplicated, replicated, or replaced. You can't copy and paste it. Most crypto tokens like Bitcoin are fungible, which means they can be duplicated to an extent or replaced to a degree. Not to say it can be printed like fiat, but it can be cloned to an extent. That's why it's so much cryptocurrencies in a market. However, for an NFT, it's very unique to each other, and every NFT token is different, thus allowing NFTs to be used to represent original artworks, collectibles like digital trading cards, music, and videos. But I agree, there's a lot of famous people in Clubhouse. But there's also a lot of weirdos too. Then again, if you attract a lot of weirdos and other stuff like that, you know it's a trustworthy social media. And the way NFTs are built that allows them to flourish in the world of digitalized art. I mean, you can't just use PNGs and JPEGs anymore, JPEGs, when NFTs are allowed. And modern NFTs right now at the moment are based off Ethereum blockchains, but there has been development to use other types of blockchains too, which from different brands. But the reason why modern NFTs are using Ethereum blockchains is that they can hold additional, Ethereum itself is very special, that they can hold additional data or information about a particular token, particularly smart contracts. Compared to Bitcoin, which can only hold the token itself, you can't share much out of it. But Ethereum itself, it can share other forms of data on it too, thus making use of the smart contract in Ethereum, which the additional data can include the verification of ownership, history of ownership, and the prices on the additional data of NFTs. There's actually been a lot of good development regarding the prices on NFTs too, thus allowing to give better financial data on it. I mean, there's already been multiple NFTs been sold for thousands and almost $1 million too. There's a lot of profit on it, but there's also a lot of potential to avoid censorship on social media too. That concludes my presentation so far, and here are the citations. As you can see, I used a lot of I researched a lot for this presentation. Yeah, I'm like the seal at the moment. I was forced to cite my sources. And that concludes the presentation so far. So far, I just want to give an introduction to what I'm trying to teach in the class. I'll try to go more over multiple topics, delving deeper into NFTs and earlier days of digital currency too. And I want to go more. I want to share this to the chat. I'm sorry, everyone. I'm not entirely used to Zoom.
They can put their emails in chat and I can send you that chat.
Oh, that's good too.
So just back up, type your email in the chat with the name.
I got a quick question. So, what is your favorite cryptocurrency or your top two?
My favorite cryptocurrency?
Yeah, or your top two, you know, like, or which coins are you most interested in?
Top two, that's hard.
You can go
I would say
top three if that
Monero
makes it
and
easy.
Ethereum are my two favorites at the moment. Yeah, the reason I like Monero is that it tends to be a more what the Bitcoin used to be in the early days, more of a peer-to-peer technology, trying to avoid the middleman. And Ethereum itself, it's where all NFTs are. It's where I think it's where the potential of cryptocurrency really lies on the Ethereum. It lives up mostly to the hype so far.
But if you want to look at that TV screen over here, you can see I want my trading view set up and just looking at a couple pairs right here. So this is all, when you see where it says VET, USDT, that means it's basically a futures contract tethered to the Tether, which is like a stable coin, which is pegged to the US dollar 1-to-1. So $1 is supposed to be one Tether, but you know, not to get too far into it, sometimes it's like worth 99 cents, you know, it's not perfect on a dollar, sometimes it's like $1.01. So it fluctuates, but to trade in the futures market using the platform that I'm using, you have to do it using Tether. So you can't just trade just the security itself, you have to, or just the crypto itself, you have to do that pair. So if it doesn't have a pair, you can't trade it when it's specifically talking about futures. And futures is kind of like a way of leveraging your money, where you pretty much pay the broker a fee, and you get to basically take $10, or let's say $100 to make it simpler, and you can 3x leverage on $100 is $300. So rather than buying $100 worth of VET, you can buy $300 worth of it and pay a small fee like 50 cents to $1 for that trade. Now, there are big downsides to futures because although it has a strong upside, it also has a strong downside. So just as quickly as you'll gain your money, you will also lose your money, because I have lost my money from experience. So it definitely happens. You want to be careful with it. But look into futures if you're interested in it, because I think it's cool to know that there's other options other than just buying and holding. You know, there's other strategies, you know, other than just buy and hold. You can, like, for example, when I first started learning about options, I didn't even know options existed until I did. And then I'm like, okay, so you can either buy stocks or you can buy an option for the same ticker. And I think that just that concept itself of you're owning the shares in both instances, but in one instance, you're owning the right, but not the obligation to own the share. So it's interesting how you can have different pieces of ownership for different assets. And we're going to see that as a reoccurring theme when it comes to a lot of different things. And it's the same thing in real estate too, as well. Like on a building, you can have 2 or 3 levels of debt, you know, mezzanine debt, you have different levels of equity. but like you can have multiple levels of debt on one asset. So it's an interesting concept, to think about where what is value, like what derives value of something. And like it's pretty open for interpretation, like we'll get into it a little bit in the second slide, but the history of money is very fascinating. And I highly recommend on your own time, go to YouTube and just look up what is the history of money and like watch the top 5 videos, because you might be surprised at what you find, like on how the history of it, how it was created and how we've gotten to the point where we are today. And it gives you an insight into human nature, really, where like humans, we create a currency and that currency poses a problem, and then we have to fix that problem by adopting either a new type of currency or changing some aspect of it to beneficial, the whole economy. But we'll give it 3 more minutes. I wanted to ask y'all if y'all had any kind of preliminary questions or anything you kind of want to get out of this class that you may not know, or if you have a lot of experience or not that much experience with crypto.
I have no experience at all. I don't know like anything about crypto.
Okay, good. And that's totally fine. And that's good to have an open mind on it and to be new to it as well. So I like that. What about y'all?
Made money and lost money.
Okay. Sounds about right. What about you? Just trying to learn? Okay, cool. And what about you, my man?
Same thing, made money, lost money. Looking to expand my mind with new strategies.
Expand your mind with new strategies. I like that. I see some other friends over there. But yeah, I'll go ahead and I'm going to start it just a little bit early. We only have 2 minutes left to the start, so I'll just go ahead and start it. And we can always circle back if we need to. But just to get started, this is going to be the second class. I have the first class slides in the Telegram group chat, which I will send you that link after class. But just to kind of give you all a quick agenda, today we're going to be recapping the history of money. We're going to be talking about how to set up a GPU mine. We're going to be talking about how to buy an NFT. And then we're going to be talking about futures trading on KuCoin, which is the one I use. And then we're going to be talking about some resources, Coin 360, which is a great way of staying in touch with the market. And as you walk in, go ahead and just sign this real quick. Sure, it's just going to be a signing sheet for the day. But yeah, so that's what we're going to be discussing today. And throughout the presentation, and anyone here on Zoom as well, just let us know if we have any questions. And I'm sure people are going to be joining in for the Zoom. So they'll be joining in during the presentation. All right. So just to kind of review a little bit from last class, the history of money. So how did we get to where we are today when it comes to money? So we started off with the barter system, trading. Just think about, someone has a farm and they have cows, and what are you going to do with that cow? You can't live off just cows, so you have to trade your resources. So maybe you would trade a cow for some hay, or vice versa, right? You're trading from one good to another, but there's some problems with that, right? You can't split a cow in half. The value of a cow might not equate to the value of a tent, for example. Like, how are you going to have equivalent value there? So there were some problems with that system. So we thought, let's try to think of another way. So we then adopted the seashell based system, where we would use either a shell or some type of token to represent our monetary value. But there are some potential downsides to that. If you go find a beach filled with them, you might become a millionaire in the shell world. But there's also no way of making it distinct, and it's not unique. So there's some problems with that system. So we created a new system. So we had minted coins. This was like the high-tech idea of the day. And these really originated from China thousands of years ago. We had these little coins with a little hole in them, and they would carry around a string.
and you would string all your coins together, and then you'd carry them around, they'd be shaking around everywhere. You carry these giant bags of coins. But then, in China, they ran into this problem. Like, what if you have a bunch of money and you have all these heavy coins and you literally can't bring them anywhere because you're so rich, right? So they then thought, we're going to have to either add some type of paper money to get rid of the weight or some type of other system. So a couple thousand years later, we invent the gold standard, and the gold standards, was around for a really, really long time, and we derived our value of monetary value from the gold standard. Everything was based off gold. Like back in the day, you could take your US dollar and trade it in for real gold. Like that used to be a thing until Richard Nixon. But anyways, we get into the Bretton Woods system, in 1945, and this really changed the game. So this was after World War II. And then many people don't know about Bretton Woods, but look into it, because that's when we really went from a gold-based system to fiat. That's the beginning of fiat. Fiat developed a lot and grew in more popularity through the US. So after World War II, the US was the economic powerhouse of the world and was kind of like the center of the world economy. So the Federal Reserve pretty much had a lot of power in that instance. So they kept printing dollars. So around the Vietnam era, 1971, as we all know, Richard Nixon shocked the world and took us off the gold standard. So then at that point, the fiat system wasn't even backed by gold. It was purely backed by the faith and credit of the United States government. And then all monetary systems up until 2009 have been a fiat-based system. So right now you have all the central bankers of the world. You have the European Central Bank, you have the Chinese Central Bank, you have the Australian Central Bank, you have the Canadian Central Bank. All these central banks control the money supply for their countries and therefore control the money supply of the world. So what were the problems? So we ran into problems in 2009 with the financial crisis. Thank you. In 2008 and at the beginning of 2009, we had the financial crisis, and that was the birth of Bitcoin, the first alternative to a government fiat-backed system. So this wasn't too long ago. This is like 11 years ago. This is the first time in history we've ever had an alternative to a government-backed currency. And if we look back into history, it might not be too crazy to think that we might change the system that we've had since 1971. Because as you see here, the system is always changing. And what we as a society perceive as valuable is always changing. So whenever you're thinking about crypto or talking about crypto, always go back to the history of money and how did we get to this point of what is money? Because a lot of people don't understand the value of crypto, and it's subjective too. So just think about the history of money. So first point here is going to be how to set up your own GPU mine if you want to. So this is coming from experience. I actually have one set up. This is what it literally looks like to be mining crypto right now. So I use NiceHash just because it's very simple and easy to set up, but there are other ways to do it software wise. But just for example, to show you here. So I have two mining rigs set up. The first one here is a computer that I bought off Facebook Marketplace. This dude wanted to buy a Corvette and he was selling his gaming computer to get cash. So I was like, yo, bet, I'll take your gaming computer. Let me get you some cash. Made the trade and boom, I started mining. $5. I was mining about $5 a day in Bitcoin using this computer I bought. The other dude was happy. He got to get his Corvette. I'm sure he was thrilled about that. And then I was happy. I got a cash flowing asset. I have something where I'm literally taking electricity and turning it into money, which is crazy. Like that I can do that in my apartment, and this is only, facilitated through 21st century technological advancements. But anyways, that was my first rig. That's how it kind of got started because, I talked for years about setting up a mine. I always was like, yeah, I'm going to do it. I'm eventually get into it. I'm going to Google it. I'm going to figure it out. But then I never did. And I was into crypto way back in the day since really I got into it when I was in high school with my friends. We were just trying to buy some stuff online and crypto was the only way we could buy it. So it was like, why not? And that's how we got into it. So Anyways, long story short, you know, I'm using crypto for a little bit, and you know, I learned about mining, and I think, you know, maybe it's a good idea. But it wasn't until this year that I actually pulled the trigger, did all the research, had the capital to actually buy the equipment. I sold all my Apple stock. I worked for Apple for 2 years at, you know, the Apple store doing technical support. I sold every single bit of stock I had. I liquidated my 401k that I built up, you know, from 2 years of working. And then I went all in on crypto, and I started this mining rig. And I figured, you know, why not? You know, I asked myself, why not? I'm in my 20s, I'm younger, and I got the time horizon, you know, like I can buy stocks and bonds when I'm in my 30s. Like, I'll be straight up honest with y'all. I'm willing and want to take risks when investing because of my time horizon. And I completely understand that. And I realize that with a small amount of capital that I have, I'm okay losing, because I know that in the grand scheme of my life, I'm in my years where I really have a lower earning potential. So I can take higher risks. So that was my strategy, my idea behind it, but I went for it. So I've been mining since April of 2021. I'm still a noob, you know, like I don't know everything about mining. I'm still learning, open to discussion. We have some people in this class that also mine as well. So we're going to be talking about that. And miners are always helping each other out, sharing resources. I have a close friend in Houston that actually got into it before me, and he helped me get my mind set up. So I'm just trying to pay forward the favor. And if you're curious on how to do it, I'm always willing to help you set it up. So because someone did it for me, and I just want to pass it forward. So yeah, that's kind of how I got started into it. And I've been mining for a couple months now, and it's been profitable. I make more money using my mine than I spend in electricity. The numbers are, you know, very rough because the profitability is always fluctuating. As you can see over here, right here on Coin360. And for the people on Zoom, just to show you, this is Coin360. It's a way to visualize the market. Bitcoin is constantly changing in price. Like right now, as we speak, it's changing in price. So just like Bitcoin is always changing in price, the profitability of mining is always changing. Some days you have a higher mining profitability. Some days you have a lower mining profitability. It just changes. So in roughly speaking, I'm spending around $100 or so in electricity costs every month. And I'm bringing in around $350 to $400 in Bitcoin every month from my 3 GPUs. So I'm net positive when it comes to the cash flow. But you got to remember, you got to also take in appreciation. So let's say I take that Bitcoin that I'm earning and I hold onto it and I don't sell it. And in fact, you can actually do this thing called staking, or earning interest on your crypto. And you can stake your Bitcoin and earn interest on top of your interest, right? So you can literally take $1,000 of crypto, put it into a Celsius wallet, and earn 6% paid out weekly. So weekly, you're getting 6% of your interest on your Bitcoin paid out in Bitcoin, meaning as the price of Bitcoin goes up over the long run, and when I say long run, I'm talking 5 to 10 years. So my time horizon for these investments is a decade. So don't get into crypto for the short term, get into the long term, and then you won't be stressed about the day-to-day price movement. Like Bitcoin could crash to 20K right now, and I would not be phased at all because I've seen it before, and I got the long-term vision because I'm willing to stick out the bear markets. So that's just one thing to consider. Really have a long-term vision on it. So kind of how to set up your GPU mine and what is like the fundamentals of a GPU mine. So first things first, you're going to want to acquire your GPU first. So this is the hardest thing to get out of all the other parts and components. You can literally get every single part except for the GPU. And you can get all the other parts pretty easily, but the GPU is the hardest part to get. So before you buy and invest any money into all the other parts, acquire your GPU and have it in your hands first. Because right now there's a big GPU shortage, not only due to the increasing popularity of mining, but the increasing popularity of GPUs in general. People using them for gaming, people using them for video editing, people using them for whatever. The popularity is increasing and the supply is decreasing due to a myriad of factors. the silicone demand from the car industry, you have the shipping container issue. All these have caused a inflation of the prices. So how do you get one? You may ask. The way I got mine was by waiting in front of a micro center in Houston for like 14 hours. Like I literally stayed up all night, drank a lot of caffeine, stayed up in line just to hope to get one. And sometimes you didn't get it. I went there 3 times and I got nothing and I wasted my time. But that's how crazy the market is. And that's what I had to do to get one. So it's not easy to get one. It's really hard. It's the hardest part. There's Newegg Shuffle that they do a raffle. You can get lucky with that. There's a question, is it easier to get ASIC miners? So we'll talk about ASICs more in depth in another class, but it basically stands for an application specific integrated circuit, basically a fancy term for a computer built just to mine one currency or 2 currencies, depending on what it is. But we're just talking about GPU mining for now. So the hardest part is really getting that GPU. So if you can acquire that GPU, great. You got the first step done. Then you can follow up. So once you have that, you're going to want to set up the mining hardware you're going to need a mining frame to screw in your GPUs and to put everything together. You're going to need a power supply, a motherboard, a CPU. You're going to need RAM. You're going to need these things called risers, which if you're a miner, you know what a riser is. It's basically just like it extends the PCIe slot so you can drop the GPU in there easier. But yeah, you're going to want to get all that stuff. And then it's really not that hard to put it together. Like anyone can put it together. Trust me, I'm a dummy. And if I can put it together, you can put it together. So it's pretty simple. The hardest part is getting the actual parts. So you might ask, how much did it cost me to get all my rigs set up? So for this guy, it was around $2,000 I bought. It was like someone's computer that I bought secondhand. So that was my cost for that. For this guy, it was probably $3,000 altogether. 1,000 roughly for each GPU and probably another 1,000 for everything else combined. My all-in cost is around like $5,000. And right now, after 3 or 4 months of mining, I've made around $2,500 in Bitcoin. So I'm about 50% to my return on my initial investment. And once I reach that ROI, then I'm just going to be in the profitable zone from there. So I expect my ROI to be between 6 months to 12 months. And, like I said, long-term vision on it. So I'm willing to write it out. So some other things to consider when mining. First thing is going to be your electricity costs. Electricity costs is super important because depending on where you live geographically, it's going to range. Thankfully, Texas is awesome and we have super cheap electricity. Like you may not know this, but like we got cheap electricity here compared to other parts of the country. I looked at my bill and I'm paying between 11 to 12 cents per kilowatt hour, which compared to New York, for example, they pay like 40 cents a kilowatt hour, like 4 times what we pay, because it's obviously a more dense region and, they don't have as much, power production as Texas does. So one great advantage of living in this state is we got super cheap electricity. So it's super awesome. There's another question. How many video cards can you fit on a PCIe Express slot without a riser? So without the risers, you run into issues. I'll go back so people can understand. So this is the motherboard here, and this is kind of what the slot is. So you can imagine trying to fit 3 big blocky brick-like things onto a really small square board is hard. So what the risers do is it allows you to space them out differently so you can fit more. So that's kind of how that works. So yeah, electricity cost is the number one thing you want to consider. The second thing is going to be internet. You want to have a solid internet connection. This like kind of just goes without saying in the modern world, but like you're going to want to have good internet because you're going to be using a lot of Ethernet cables, and mining itself doesn't necessarily take a lot of bandwidth, but you're just going to want to make sure you got a good internet connection that's stable, because if your internet goes down, your mine goes down. And trust me, every time my internet goes down, I have to go in and reset my mine. And there's this thing we call downtime when we're mining, where it's like when your GPUs aren't running, that's downtime. And you want to just reduce the amount of downtime that you have as much as possible. So the third thing is expect things to go wrong. So like when you get into mining, you might think it's just like once you start it, you just sit back and watch it. is not the case. Like sometimes it is like that where it will work for a week straight and you have no downtime and it's just like you're watching the Bitcoin come in and you're just super happy. But other times you look at your phone and you can remotely monitor it, and you'll see your GPUs are down, and then you're all sad because like you're away from your computer and you can't restart it. So I have solutions where like I'll call my roommate, like I'll be literally like camping, you know, in like Pedernales State Park, and I'll call my roommate. I've done this before. I called him, like, yo, man, my rigs went down. Like, can you go into my room and like I'll just tell you over the phone how to reset it. And like he would, and then like I would reimburse him with a little bit of Bitcoin. And that's another thing I do with my roommates is I actually do profit sharing, where like I give them a little bit of my profit as well for being in the house. So another thing is to consider is mining makes a lot of noise. Like if you don't want a loud machine in your room all the time, then like this is probably not the thing for you. But like it's just one thing to consider, that it also produces a lot of heat, which is terrible during the summer, which I like sweated super hard this summer, but it's great during the winter, you know. Like when it's super cold outside, like I'm just be chilling by my GPUs getting warmed up, you know. But that's another thing to consider, you know. It's something I didn't really think about when I first started mining, but they produce a lot of heat because they are working, they're producing something. But yeah, expect things to go wrong. The profitability is not going to be as much as you think it is. Like when I initially looked up the profitability for a card. So for example, here on I'll look up, and this is kind of how you want to think about it. Say you're eyeing a 3070 to buy. So you just go onto Google, 3070 profitability, first option there. You'll see here, nice hash, profitability calculator. You can go here, cost for electricity, 11 cents a kilowatt hour. And then you see here, approximately produces $3.54 a day with current profitability rates. And like I said before, this is constantly changing. I got another question, where are all your cards LHR? I think they are. So I think LHR, I forget what exactly means, but NVIDIA kind of created two batches of cards, one that wasn't regulated and one that was. I think I bought mine before where they didn't make that change, but that's kind of a more of a niche thing. So we'll kind of skip that for now. But yeah, you just want to consider other things than just a GPU when you're mining. So next, I want to talk about NFTs. I feel like there's a lot of confusion around the space and like, what is the value of an NFT? What is an NFT? So this is how you buy an NFT. So step one, go to OpenSea.com on your phone, on Safari. You can go to OpenSea. OpenSea is a NFT marketplace. Think about it like eBay for NFTs or Amazon for NFTs. So you go to OpenSea, you go to the three lines, like any website, and then you can connect your wallet. So you go to connect wallet, and then it'll give you a couple options. You've probably heard of Coinbase before. You can connect your Coinbase account and connect your crypto and send your crypto to OpenSea by connecting any wallet. And then step number 3, pick an NFT that you like. The value of NFT is kind of in the eye of the beholder and who creates it. So those are the big things you want to consider. So you can see here royalties, it has a 5% royalty. So every single time this is bought or sold, 5% goes to the creator, which is super interesting because when it comes to creators and artists actually getting credit for their work, and historically, they've kind of gotten screwed over a lot of times. So NFTs are cool because it gives the monetary power to the creator of that art piece. So let's say you find an NFT that you like here and you want to go ahead and purchase it. Then you just press checkout, you agree to it. You can see the price is $15 there in Ethereum. Now, here's the hard part, is mining fees. So mining fees are a huge issue right now because as you see here, for this NFT, it costs $15, but to process that transaction onto the blockchain, it would cost $121 to process that. That's the miner fee. So that's how much it's going to cost to pretty much put this on the blockchain and validate that as your NFT that you own and no one else in the world does. And some people might think of, oh, NFTs, they're just a JPEG. What's the value of it? Like, if you take a picture of the Mona Lisa with your phone, is that the same thing as owning the Mona Lisa? Like, no, it's not. You know, if you take a picture of a house, it's not the same thing as owning the physical land and the property on the house. So think of NFTs as like you are owning the real estate in cyberspace. Real estate in cyberspace for that specific NFT. So think about it more like real estate, like where it's like a definitive set thing in the blockchain. And that's what these miners are doing. That's what I'm doing. That's how I'm getting paid. My GPUs are mining. I'm getting part of that fee. That's how I'm getting paid. So that's kind of how it ties into the GPU mining. Like, and I'm validating transactions on the NFT marketplace and getting paid out in crypto. That's how mining works. So NFTs are just one aspect of cryptocurrencies. We'll have a whole class dedicated to NFTs, but just in general, this is kind of the process of how to buy one, just so you kind of understand it. But we'll go more into it. Question?
So once you own it, could you create a royalty for its usage?
Yeah, so it depends on what type of NFT you're doing, but it really just depends on what you set the royalty as. Like I've seen some royalties set to 5%. I've seen some set to 10%, some to 15%.
So let's say it's a song. You create an NFT that's the rights to this song.
Yeah.
Obviously the creator gets a royalty,
Mm-hmm.
but you bought it off the creator. Would you then be able to like say it's open source to anyone, for anyone to use in their YouTube videos?
Yeah.
But you need to pay me a royalty of a couple cents every time it's used.
Yeah, in theory, that in an ideal world, that's how it would work. But obviously, right now, NFTs are not fully fleshed out, you know, and specifically with audio NFTs and music, I think that there are some coins. I think Audion is one coin. There's a couple other coins that are specifically tailoring their whole blockchain specifically for music. So I want to look more into that. I'm gonna do more research into that. But I don't know everything about NFTs too, y'all. I want to be open with y'all. I'm still learning this stuff myself. It's not all cut and dry, black and white, and you know, there's still a lot to learn. So it's a good point that you bring up there. So here's a little bit of futures trading that I've been doing. So what is a future? A future is a contract that you can pretty much leverage your money betting on the future price of a asset class. So real quick, actually, before I talk about it, I have a question about gas fees. So what is a gas fee? So a gas fee is basically, think about a miner fee. So for the people on Zoom, it might be hard to see this. So like to buy this transaction, it would cost $15 in Ethereum, but the miner fee is going to be $121. So when you hear gas fee, think about the fee for the miner who's validating the blockchain for your transaction. So I'm doing a little bit of trading on KuCoin. KuCoin is an app that you can download on your phone and link and send some money to. So it uses USDT to make the trade. So I always have to have USDT, which is stands for Tether. It's a US dollar Tether. And basically, once you have this tethered cash, you can leverage that cash, you know, up to 5 times for my current leverage limit. Some people can go up to 20 times. Some people do 100 times leverage, but I'm pretty chill. 5x leverage is like the max I'll go. I probably usually leverage between 2 to 3x. But what this allows you to do is it allows you to take like $100 and buy $300 worth of Bitcoin. You know, instead of buying $100 of Bitcoin with $100 cash, you can leverage it, pay a transaction cost, like a commission to the brokerage. KuCoin costs like 50 cents for a trade, for example. And then you can leverage your money that way. So there is a carrying cost. So I had 2 trades here that happened yesterday. This is just to show you the power. I'm not trying to flex. This is a very small account, but I made 121% in less than 1 hour on a leverage trade. I leveraged around like $100 to $200, and it cost me like $1 to carry that in commission. And I turned like $100 into $200. It's 121% return in less than an hour trading Shiba Inu coin, which is a meme token that is literally like, it's a joke. Like a meme token like is a token kind of created as a joke, but people buy it for whatever reason. I bought it purely off technicals, not like a fundamental thing. Like, you know, I own a little bit of Shiba Inu as like it's kind of like a Doge hedge where like if Doge, you know how Doge went from like 3 pennies to like 18 cents and everyone was like, why? It's kind of like I'm buying a little bit just in case that happens again. I don't want to be caught out without it. So I'm putting all my money into it. I put like $10 into it, you know, something really small that I'm willing to lose, you know, no matter what. But anyway, so the futures trading, I had 2 trades, one that cashed out around $100, and then one that actually just cashed out today, which was a $230 profit, which was super awesome. I pretty much did a pyramid where like I took all the profits from my last trade and put it into the next one, all leveraged. So it's all multiplied a little bit more. So I had some 121% return there, and then just 102% return on my second trade. And I have another trade again going on right now as we speak. So I will check right now where we're at with that. And looks like we are up a little bit. We're up like 10%. So we're going to keep on holding that. I'll probably hold it to the end of the meeting tonight and then close out. Y'all can ask me if I lost or made money on that. But as you see here, not every trade is profitable. Like I do lose money, but you want to let your winners run and you want to cut your losses short. That's what I've learned. I've been kind of trading since kind of like I left my job at Apple. I've been just kind of trading on the side, very small accounts. So like I have all my accounts, whole portfolio kind of visualized as a pizza. And if this was a whole pizza, then my trading portfolio would be one small slice of that total pizza. So like, especially with futures, it's very high risk, high reward. So I'm making $100 here, $100 there, but I could easily lose $300 tomorrow. So there is risk associated with it. So just one thing to consider when trading with futures is keep your account size small. Learn how the mechanics of trading. I made hundreds of bad trades before I made one good trade, you know, and I had no idea how to trade when I joined the society. You know, when I was a sophomore, I didn't even know like really how to buy or sell stocks, you know, and I just learned it by just spending pretty much just 1 hour every week, you know, learning about this stuff. And then it just compounds over time. I was in y'all's seats coming to these classes, trying to learn about it. And that's kind of how I got into it. And then, you know, once you get a good understanding, you can start trading. And it's a lot of fun too, because, you know, it's fun to just interact with the financial market. So my idea was behind the trade was I saw all this bullish news, you know, New York Post, all this stuff talking about the Shiba Inu coin. So I call that kind of just like a bullish indicator in my head and bullish momentum towards the coin. So like, I'm not even long-term bullish on Shiba. Like we can check the chart right now here on TradingView on that TV on the screen on the right. Here it is. So you can see this is where it started at 0.000034 of a dollar. So this is not even a penny. And you can see here, it immediately crashed after being created and was hovering up over like a sixth of a penny, or like 0.00006. And then recently in October, we just had this huge just skyrocket in price value. So yeah, I mean, I saw this bullish momentum and I was just like, you know what, I'm gonna place a trade, because if we break through to all-time highs, we got all this as a profit zone here. So that was my idea behind the trade. You know, just I don't trade randomly. I like to have an idea behind my trade because I think you have a better chance that way. But yeah, some apps I use. So a lot of people ask me what apps I use in crypto. So this is kind of just a quick screenshot of my phone of some of the apps I have. So TradingView, I use that for charts. This is kind of more traditional stocks. KuCoin is like kind of my main futures trading where I leverage my tether. Robinhood, you know, is the OG just for fun, kind of. I just have some fun stocks in there. Gatsby, that's for trading options. If you're interested in options, I kind of mess around with them a little bit. Thinkorswim, this is kind of more like my medium to long-term account where I'm just buying just straight boring old stocks and, you know, ETFs. And then Webull, this is kind of like Robinhood, but you can do options and stuff there. It's cool. It's easy, nice user interface. MetaTrader 4, this is for, I honestly never use this app, but I have it just in case. But that's used for like currency pairs. So think of like Japanese yen and Australian dollar, trading that. For price movement, I have CoinGecko and CoinMarketCap. These are both websites as well. So CoinGecko and CoinMarketCap. On the TV screen here on the right, you'll see CoinGecko. It just pretty much the top, it just shows you the market capitalization of the currencies, the current price, the 1 hour change, 24-hour change, and the 1 week change. You can see here the market's pretty bullish right now. We've been recovering really well. But this is what I use to kind of just stay up to date with the prices. So over here, we got Kraken Pro. This is another exchange, Coinbase Pro. Coinlist, I actually think that got taken down, so ignore that one. Exodus, this is a wallet that you can use to hold Theta, which is a currency, a cryptocurrency. Uphold, that's another exchange. That's a Theta wallet. That's what you use to hold your Theta, but you can also hold other stuff with the Exodus wallet. But yeah, that's that page. And then this one, I got my nice hash monitor. That's where I check up on my mining profits. I can see, how much profit I'm making per day. I can see my total account value. Voyager and crypto.com. These are kind of my two main ones that I really would recommend. Crypto.com is just another exchange. What's cool about crypto.com is you can stake your currency, so you can earn interest on it. So you can lock it up and earn a % reward on that. You can do the same thing with Kraken. So with Kraken, it's the same company as Kraken Pro. You can stake your Cardano. So Cardano is a cryptocurrency that you can buy and you can earn, I'm earning like 6% APY on it with my Kraken. And then that interest is paid out as a reward for holding it. And what's the beauty about staking is, staking with crypto.com, you have to have it locked in where you can't sell it. But what's interesting about staking with Kraken is you actually don't have to lock it up. Like you can literally sell it at any time and you don't have to lock it up to stake it for that specific one. FTX, that's just another brokerage where I own some Solana there. Coinbase, that's kind of the OG one. That's one that's been around for the longest time. And this is what I would recommend. If you're new to crypto, start with Coinbase. Coinbase has a great user interface. Think about it. It's like the Robinhood of crypto. So like if you're new to it and you just wanted something that it's going to work, you know where to get it, and it's going to be an easy user interface, use Coinbase. It's really big. They're publicly traded, as you might know, on the stock market. So they're super legit. So yeah. The one thing about the downside to Coinbase is they have big fees. So if you want less fees, use something like Voyager. Celsius, this is another thing that I use to earn interest on my Bitcoin. So what's cool about Celsius is it pays it out weekly. So every week I'll earn like 0.000000000 like 31 Bitcoin, right? But like a very small amount, but it compounds over time. The eighth wonder of the world is compound interest. You just want to think the long term because it will compound on itself. Yoroi wallet and Nexo wallet, these are just other wallet platforms that you can use to hold your crypto. Now you might see a theme here where like, I don't like to hold all my crypto in one place. And that's my biggest piece of advice for someone new to crypto is do not put all your eggs in one basket. Do not hold all your crypto in one exchange. If you do, that exchange is likely to just go out and you're gonna lose everything. Like it just happens that way. Like you just don't want to be caught in a scenario in which all your money is in one basket. So what I would recommend is split it all up into multiple different. So I'll own a little bit of crypto here, a little bit of crypto there, a little bit of crypto there. And what's kind of cool about it is sometimes you forget. No one right now. But what's super cool about it is sometimes it can catch you off guard in a good way. Like I remember one time I totally forgot about some Cardano that I had. And I literally I just totally forgot I was holding it in this app. And then just like randomly I checked one day and I was like, boom, like it had like risen a bunch of percent. And I was just like, whoa, like I had no idea I had that there. So that can happen to you sometimes, but just another thing to consider is just like kind of spreading it out. But yeah, lastly here, we're just gonna end on some resources that I use. Coin 360, I've been kind of referencing this a lot throughout the class. And I reference it a lot because out of all the crypto resources I use, I literally check this every single day. Like literally every day. I'm checking it right now live, you know, over here. This is a great way to visualize the market from a 360-degree view. You know, you're literally looking at the market, the whole entire crypto market. You can see, you know, SHA-256. What is that? SHA-256 is the hashing algorithm that Bitcoin uses to validate its transactions. You see here ETH hash. ETH hash is the algorithm that Ethereum uses to validate its transactions. So on my GPUs at home, kind of tie everything back together. So these guys right here, see all these lines of code right here? That's ETH hash on my computer, just running. Right now, you know, at home, it's going, just chugging away, you know, for me. But yeah, that's what ETH hash is there. You can see here, DFTB, this is Binance Tokens Network, and you have all these mini ecosystems within these. So Ouroboros, that's Cardano's, proof of staking algorithm that they created themselves. So you can see here it's in its own little block. And then XRP has their own system, you know, the Ripple system, and you can see it's own block. Over here, you'll see Ethereum token. So Ethereum has the ability to, it's kind of like a general purpose blockchain. So you can create other cryptos on the Ethereum blockchain. And that's why you have all these coins like Shiba Inu, for example, where I made that big return. That's an Ethereum token. So it's derived from Ethereum. So that's another big reason that you see Ethereum being the main competitor to Bitcoin, is because it has a really big ecosystem behind it. And that's what Cardano, that's what Solana are wanting to do, is they want to create their own ecosystem and grow their own thing. So what do you want to take away from this? I think the biggest thing that you want to take away is that there's going to be winners and there's going to be losers. You know, the crypto market is just like the stock market. Not every single company is going to be a winner long term. So it's one thing you want to consider is like, which of these, do your own research, you like, which projects do you like, which projects are you interested in, which projects do you believe in, and then stick to those. What I'd recommend you do, and this is how I got started, is dollar cost average into the market. What's dollar cost averaging? It's basically setting a amount of money that you're comfortable with to set aside every single month. So for example, when I was first buying Cardano, which is at like $2.20 right now, it was at like 15 cents. And I didn't know it was going to be super big, but I started dollar cost average, you know, into it. And I would just, every paycheck, $50, I put into Cardano back when I was working at Apple, $50. And I didn't even think about it. I had a system where it automatically took the money out of my paycheck and automatically bought the crypto. So it's kind of complicated and weird to set up, but it's worth the time to set it up, because once you set it up and you're working, you know, you're literally investing without even having to think about it. And then if you truly believe it in the long term and you dollar cost average for 1 year, 2 year, 3 years, 4 years, 5 years, you're going to realize that it stacks and that compound interest happens a lot quicker than you originally think. Just $10 a month in crypto can really be a lot in a year to 5 years, you know? So don't think about it from just a 1 month, one-time purchase thing. I would recommend you to adopt a more of a long-term approach of dollar cost averaging. Yeah, again, it's another way to mitigate risk, because, you know, if you're cool losing $10 a month, you know, that's cool, you know, and you just got to figure out what that number is for you. It may be bigger, it may be smaller, right? So just got to figure out what that number is for you, and then, you know, stick to it, stick to your plan. You know, if you've got the vision, stick to it. Yeah, that's pretty much all I've got for class today. Thank you so much for everyone coming out. The turnout was awesome today. So I just want to thank you all for that. Especially thanks for the people coming into virtually as well. I got a question. Do you have to report profits from mining? Yeah, probably, but there's not really like a system really well set up right now for like taxing crypto. So it's kind of like a gray zone right now on like how to pay your crypto taxes. Like There's some softwares called like cryptotrader.tax, which will automatically generate a profit and loss, for your crypto. But that's just something that's kind of being developed still. Do we have any other questions? No. All right.
For your GPUs, do you just like mine out all of those, or just like Bitcoin and Ethereum?
Yeah, good question. So I do mine multiple algorithms. What's cool about NiceHash is it will automatically switch the most profitable algorithm. So the main two ones are ETH right now, or is the most profitable.
Do you have to do the coding for that?
No, like I don't have to do I write a single line of code. NiceHash does it all for me. All I have to do is provide my GPU, set up my account up, link my wallet, and then I get paid. But NiceHash takes a cut for that. So you can also mine by just running the algorithm on your computer yourself. Like when you download you can get the algorithm off like a GitHub where it's like open source. It's like freely available for anyone to download. You just want to make sure you don't get the right link. You don't want to download the wrong one. But yeah, that's once you have it set up, you can either mine through a third party like NiceHash, or you can just mine directly from your computer to a mining pool and get paid and skip out on the fees. But you do have to do that work of making sure that application is always open. You got to make sure everything's running right. Because if it goes down, it goes down, So yeah, so we're going to stop for the meeting, but thank y'all so much for coming on Zoom.
All right, so just to review from last time, we had, so I can see it too. So we went over integers, so just whole numbers, 1, 2, 3, floating point numbers, which are decimals, strings, which are ordered sequences of characters created by either double or single quotes, and variables that are the containers for data types. They're created by the variable name and then equal sign followed by the data. Variables commonly use snake casing, which is all lowercase, and underscores in the same underscores instead of spaces. Let's share the screen.
And we have some that aren't here last week, so remind us how to.
So I'm going to go into how to open up Jupyter. Okay. So to open up Jupyter, just go to the start bar and then type in Jupyter Notebook, and then go over to the new button right here, and then just click Python 3. And what I like about Jupyter is it's very similar to Excel. So it uses cells, and to run a cell, you just hit Shift plus Enter, or there's a little button at the top that says Run. So the agenda today is just wrap up indexing, go over lists, dictionaries, booleans, and some methods and functions. So on the earlier slide, something I think I skipped over last time was in order to reference a cell, that cell, in order to reference a variable, that cell has to be running. So I'll show you what I mean by that. So right here, I have cell in the slide, two variables, a equals 1, b equals 1, and then the next one I have a plus b. So if I hit run, it's going to give me an error. I have to make sure that these cells are running first, and then I hit run. Gives me the output. So, and just some things about indexing. If you leave start, so when we're slicing, we have the start, stop, and step. And if we leave start blank, it assumes that we are starting from the very beginning.
if we leave, I'm supposed to say stop, leave stop blank, it assumes go to the very end. And if we leave step blank, it assumes every step goes by 1. So I'll run this cell right here, the list. And then if you can see I have start left blank, stop is at the index 4 and step is 1. And it starts from the very beginning. Here I have the start at index 4, stop is left blank, and then step is 1. So it starts at the 4th index. So 0, 1, 2, 3, 4. And then goes to the very end. And then if step is left blank, it assumes to step by 1. And the last time I also covered indexing. Someone in the chat's asking about Jupyter Notebook.
It says it's from me, but that was from us.
Oh.
You answered it.
Oh, okay. So, and then last time we also talked about reverse indexing. So if we want to grab the very end, no matter the length, it's always -1. But as you see here, I left stop and step blank. So why is this happening here? Why isn't it giving me from the very end back to the very beginning? It's because the step also has to be labeled to go backwards, because it assumes that we're going left to right. So if I do -1 for the step and then run it, it goes backwards. So lists are ordered sequences of objects, and emphasis on the ordered part, because that means that we can take advantage of indexing just like strings. They're changeable, references the dynamic typing I talked about last time, and they allow for duplicates. They are created using square brackets, and the elements are separated by commas. And we have dictionaries. So dictionaries are unordered key value pairs. So we can't use traditional indexing like we did over here, where they have the specific position. They're created using curly brackets, and the key is first followed by the colon, then by the value. So we have the dictionary name, curly braces, key, colon, value. Here. So right here, I created a dictionary of some stock tickers. And so since we can't use traditional indexing, does anyone want to take a guess at what we'd put in place of there instead of an index number? Yes, a key. So if we wanted to grab Tesla, we would type in the key. And it gives us the value. Respond to someone in the chat real quick.
So like I just said that, so dictionaries, they're retrieved by values, and then lists are retrieved by location. All right, and we have Booleans. So Booleans are just true, false questions. So we have the traditional ones, the comparison operators like less than, less than, greater than, less than or equal to, and equal to. So instead of using just the regular, just one equals to sign, we have to use two, because just using one will assign or reassign whatever variable is coming before that. And then we also have not equal to, which is exclamation point followed by an equal sign. Logical operators, so and checks for a match with every condition. So if one condition dings false, then the whole thing is false. Or is the opposite, so it checks for at least one element or one match to be true. And then not is just the reverse result. So you can see it over here, commonly paired with in and is. And then in would be, it checks for an element within a sequence. So it checks for, let's say like Apple within the stock ticker list. And then is returns true if the objects are the same. Here. So just going over some of the traditional operators. So we use capital T true, these. Here you see the is equal to and is not equal to. And over here I have some variables. So A is 600 and then B is 700, and the example for and. So C is greater than A and C is greater than B. So return true because both questions both answers are true. And I just flip the symbol right here. So C is less than A. So it's just one variable that dings false. So the whole thing is false. Meanwhile, and then I changed it to or right here. So it's the same line of code, but only one had to ring up true, which is the C is greater than B. And I put both the symbols right here. So since everything's false on the or symbol, the whole thing rings up false. And then we have in, so I put a new list right here, 1, 2, 3, 4, 5, and check for a million inside of that list. Gonna ring up false. And then we have not paired with it. So you can see the readability here versus some other languages. So a million not in new list, and that's going to be true. So now let's move on to what I meant by objects are the same for is. So I'm going to create a duplicate list right here, which is exactly the same as the new list, and then check for new list is duplicate list. It's going to ring up false. And this is the difference between is and the double equal sign. That checks true because it's checking if the values inside the data, inside the variables are exactly the same. If I go over here and reassign duplicate list equal to new list, and then run duplicate list is new list, see it's true because I've reassigned duplicate list to be exactly to be new list. And then let's go over to some functions. All right, so methods versus functions. So it's mostly jargon, but there are a few key differences. So methods are specific to data types. So a method that I use for a list, I can't use for a string, and then vice versa. Functions, they're not specific to data type. And then another way that I use to remember is the structure of it. So when we're working with a variable or with a method, it's going to be the variable name followed by a period, and then the method, parentheses, parameter. So here I have an example. So list, append, and I'll show you more what that means, and then the parameter inside there. Meanwhile, the function it's wrapped around the variable on the end instead. So I print new list. It's not specific to any kind of data type. It will just print out the data. Meanwhile, new list.append is or append is specific just to lists. So we go down to, oh wait, not that one. So if we start typing, and then, so we type the variable name dot and then tab, it should ring up a list of all the different methods we have available to us. But we're just going to be focusing on append, pop, count, and index for lists. So append adds an element to the end of the list. So we do that right here with 6. So we're adding 6 to the end of the new list. When we print it, you can see it's been added. Meanwhile, pop, it removes an item from a specific location. But if we don't put in a parameter, it'll just remove the very last one, the very last element. So we run that, see it pops off 6, print new list again, and it's gone. And then, okay. And then we have also we have index. So it's kind of like it's similar to the way we index with dictionary. So instead of typing in the location, we're going to type in the variable, and it's going to bring back the first occurrence of that element. So if we have new list right here, and then we want, so we put the method in, so dot index parentheses, and then we're looking for target. And we type, and we run that, it's going to give us, it's going to tell us that the index is 7. So it just works backwards. Let's see if I can do it. I also forgot to put in the count one. So count isn't, it counts the number of elements in a list. So let's type in count without any parameters. I'll have to get back to you guys on that one. Okay, but let's go over to some dictionary methods. So I just have a couple here. So we have keys, values, and items. So keys displays all the keys in the dictionary, values displays all the values, and items displays all the key value pairs. So everything in that dictionary list. So here, run the stock list again. Keys, and it'll bring up all the keys. So Apple or Tesla, Apple, Amazon, values, and the values are the prices I put in, and then items. So it'll give us the whole list. Okay, well, I went a lot quicker than I was expecting. That's all I have. Do you guys have any questions? Oh yeah. What kind of lists, dictionaries, or? So here's an example. So stock list over there. And if, just to reiterate, so if we try to do the traditional indexing, so if I wanted to bring up the very first element in there, so 0, it's going to give me an error. Come on, chat real quick. So. Since we went by so quickly, let's try and figure out what the count, what's going on with the count over here. Method. All right, so some error checking over. So count takes only one argument, so parameter, and 0 will give me. Let's see what kind of parameter it wants. I see. Okay, I think I was mixing those up. So okay, so count checks for a specific element. Then okay, and if we wanted to use, if we want to check the number of elements, we use length. So there we go. I learned this on my own, and then I took a couple classes here as well.
UTSA class.
Correct.
Correct. College of Business or somewhere else?
No, it's the computer science division. So
You don't have to take the full 45 class.
oh, okay.
Yeah, that's not available.
Yeah, I can send it to you. Or you want to just give me your email address, I can send it to you.
Yeah, we can watch that as well.
Yeah, I can send you that one too. Is this you in the chat?
No,
Oh, okay, it's another person.
it's not just class, that's why.
Oh, okay. Do you already know about strings and indexing? Because I can go over that for you.
Yeah, please. I went back on my computer. No class. The terminologies, ring cells, but I don't remember.
So strings are really similar to lists. They're ordered sequence. So let's make a string right here. Or And so we can, so they can be in case, just like the same way that a list is denoted by the square brackets. Strings are denoted by either double quotes or single quotes. So we can have string and then single quotes. And use double quotes twice or single quotes twice. So, and they don't have to just be, they don't have to be sentences. So they could also contain, they could also contain numbers, and then it won't, Python will recognize that as a string. So if you try to, let's say, like multiply this variable, so string, you can't, it'll give you an error. String 2 times 2. Yeah, well, it won't give you an error, but it'll just duplicate it. And then strings, they also take advantage of indexing. But one thing to note is that spaces are counted as an element. So if we were to grab, let's say, let's say the I right here. String, and then, so indexing, it starts at 0, so we count 0, 1, 2, 3, 4, 5, and then 4 is that space. Let's see if I have that. So I went over why you want to learn it, because it's very readable, as we just saw with the other one, like a million inside of that list. It's the most popular language, so if you have a problem and you need troubleshooting, it's probably already been answered or asked and answered. And then it also prioritizes developer time over computational time, so it's very quick to get up and running. But compared to something like C or something more complicated, it's much slower. And then it's very popular in data science and then popular in machine learning. I think it's the most popular in machine learning right now. And then here's some resources if you want to take those down. This one was just basic data types. So we have the integers, floating point strings, lists, booleans, dictionaries, sets. Sets are very similar to lists, except like the one condition is that they don't allow for duplicates. So if I have, so over here, it's supposed to be parentheses, but if I had 1, 2, and then another 2, and I asked it to give me back that set, it would just give me 1 and 2. So integers and floats, they're the two main data types when it comes to numbers. So over here I said integers can become floats, but floats won't turn into integers unless specified. So do 1 times 5, that'll give us back 5. If we do 1.0 times 5, it's going to give us a floating point, 5.0. So what we need to do is we need to tell it that, tell it to specify that it needs to go back to being an integer. We need to use the keyword. So here's some of the keywords over here that generally we're not supposed to use because these are built-in functions in Python. So if we try to rename it, it's going to create a whole bunch of problems. So we put int, this function 5.0. It's going to give us back an integer. And then Here's another thing. So I'm not sure I pronounced that, but I just call it the mod operator denoted by the percent sign. So that gives us the remainder after division. So we have 7 divided by 4. It's going to give us a float of 1.75. But if we wanted to just have the remainder, which is going to be 3, we do 7 mod 4. Tells us the remainder is 3. And then also to, instead of, so to do, to power up, so like 2 squared, instead of doing this traditionally, we use 2 asterisks. And then, okay, and then I just went over creating variables, but I told you about snake casing, so no capitalized letters, and we don't want to use the built-in functions like list and str, the keywords. And also, we're not supposed to use any of these symbols, but you don't have to memorize those because if you do use it, it's going to give you an error telling you that, hey, you're not supposed to use those. So Python uses dynamic typing, so it means that we can reassign variables to become another kind of data type. So if we wanted to check the type, this is another function, type of new list. All right, it's going to tell us it's a list type. But since Python's dynamic, you can just reassign it. So new list is equal to, and we'll make it a string. And run that. And if we run type again, it's a string. So in other programming languages, you have to specify that. You have to do the same thing we did over here with like an integer, but it's much quicker that way. This way, where we can just reassign it. Let's see. So pro is that it's faster, but con is it can result in some unknown errors. So you might have accidentally done something without knowing it. And then use the type function to keep track of the variables. So strings and indexing. So we have strings are an ordered sequence of characters denoted by either double or single quotes. So all these, and then we have indexing right here. So I show you that regular indexing starts at 0, and then reverse indexing very end is -1, and backwards -2, -3, -4. Typing. Okay, and then this is how to use indexing. So it's the variable name, square brackets followed by the index number, and we can also grab. So this just grabs an individual element. But if we wanted to grab a chunk of it, so like a chunk of the list or just a whole word instead of just a single letter, we would use slicing. So it's so the syntax for that is start, stop, and step divided by colons.